everybody. Hope everyone's doing well and had a good weekend. My name is Darpan Shah, and this video is about bar by bar analysis of how Nifty is gonna behave today, live analysis. So let's start with the higher time frame charts first. This is a 5-minute time frame chart. This right here is a 15-minute, and this right here is a 60-minute chart. But we are still around 15 minutes left for the market to open. Before that, let's start with the higher time frame. Let's see how the market looks like on the monthly time frame here. So we have been in a bull trend since April 2020. Okay. So this was quite a strong bull trend here, very steep. But what does this look like? We had good looking bull bars here, but it was late in the bull trend. The market was clearly overbought here, and this is a climatic behavior. We had a good looking bull bar, but a bad follow through. The bulls barely won here. There was a big tail at the bottom of the bar. And the people who sold above bar this were able to make money. People who sold above bar this, above bar high, above July high, also made money. What does this makes you think? This is a possible climax, a possible start of a trading range. And we are soon going to have a pullback. Whenever you are buying late in a bull trend and far above from EMA, you need good looking bull bars. The bull bars here were not all that great. There was a good looking bull bar here, but bad follow through here. A doji bar in September, not all that great. Then we had a good looking strong bear bar, a bar closing near its low. Not a start of a bear trend, but a possible start of sideways to down until we correct till EMA. And this is what we had, a pullback all the way till EMA. Okay, so this bar right here, if you look at all the bars since July 2020, there have been almost 56, 55 bars here, where not even a single bar closed below EMA. If you look at this bar in June 2020, this did test the EMA but did not close below it. And all the way until here, this is the first bar in last 55, 56 bars which closed below EMA. What does this make you think like? As we all have been taught by Al, market has inertia. It likes to keep doing things what it has been doing before, and it resists changes. 80% of the time when it tries to break out in one direction, it will fail. In the opposite direction, it will fail. This was the attempt by the bears to break in the opposite direction. This was more likely going to fail. This was more likely going to be a bear trap rather than start of a bear trend. 55 bars, the first bar closing below EMA. What does this make you think? It makes me think that it is going to be a bear trap. And a possible test of the bottom of the climax here. We are in a range of support here. Bottom of the buy climax here. First close below EMA. Moving average support. A 20 EMA buy setup somewhere, likely on the next follow through bar. At this point, sometime in Feb end, had you turned on the TV channel, the news, there would have been a lot of pundits coming on the TV and saying, oh, this caused the market crash here. This is the start of a big recession. Maybe something happened in Greece, maybe in Syria, maybe because of Trump tariffs, maybe because of bad earnings. But that is all complete nonsense. It's all completely irrelevant. The market was clearly overbought here. The correction here is clearly technical and not related to fundamentals, not news based. The people who come on TV, they think everything happens in the market is because of the news. They think they have a list of all the good news and all the bad news. If the market goes down, they will start publishing the bad news. Oh, it is because of this reason that the market fell today. It is because of that the rupee started becoming weaker. It is because of some blah blah reasons. Because of Modi doing something, because of something happening somewhere in the country. But it is not. It is clearly technical. The market was clearly overbought here. The people who come on TV and say it is all complete nonsense. Does news drive the market? Yes, it does. But the market more likely behaves based on technicals rather than news. So as a trader, as a full-time trader, should you be influenced by what is happening all around the world? No. Just look at the chart in front of you and trade based on that. The first bar closing below EMA. In past so many bars, more likely going to be a bear trap. rather than start of a trading range. More likely a bear leg in a possible trading range or a weak bear channel, weak bull channel, rather than a start of a bear trend. The bulls who bought here are disappointed here. The bears, they got a good looking bear buy here, but a bad follow through here. They got a good bear close, bear buy here, closing near its low, but again a bad follow through. A bear buy here, and again a bad follow through here. There were people who saw this bar in Feb and they were hoping, oh, maybe this is start of a big correction, a big recession. Let's start selling. Might be start of a big bear trend here. And they were clearly disappointed. This is just start of a minor reversal here in a bull trend. It is possible trading range or a weak bull channel, but it is not start of a bear trend. Oh, that one. What is this? What if this may be start of a V bottom, V top reversal down? I think V top are very rare. It barely happens. When the market breaks this bull trend line here, it did, which it clearly did. It will have to reverse back up. Maybe make a higher high double top or lower high double top, some kind of a double top pattern here. Maybe a wedge top or a head and shoulder stop before it reverses down into a major recession. For now, the market is clearly in a trading range or a weak bull channel. The bulls who bought here are disappointed. The bears who bought here are disappointed. We had a strong bull breakout bar here on 3rd in the month of March. But what do you think will happen if this is going to be a trading range? Will there be happiness or will there be disappointment? More likely disappointment. And that is what we got here. A bear follow through, a big pullback all the way below this bull bar and a disappointment bar here. We are still 15 days left for the bar to close, and the bulls are attempting for the bar to close above the midpoint of the bar. We did test here, there's the EMA here, there's the EMA here, but we need a strong bull reversal here. Unless the bulls get a good bull follow throughs here, the market might get stuck somewhere here in a tight trading range on the monthly chart. So basically, if I would like to summarize, the market is right now here in a trading range. We had a big move up, a big move down. The sellers who are selling above bars made money. The buyers who are buying below bars, the buyers who bought below the bar of September low did make money. The buyers who bought below this bar made money. The buyers who bought below this bar made money. Trading ranges are forgiving. The bulls and the bears who are selling above bars and buying below bars will usually be rewarded, and that is what is happening here. This is a clear sign of a trading range. If it starts making higher lows, the bulls start getting good follow throughs here. It is in a possible bull channel, but right now it looks like a trading range to me. Might get stuck here for another 5 to 10 months, and then we might have a breakout one situation, in which case we might break out above. 50-50 chance we might break out above and get a measure move up. And 50-50 chance we might break out below and get a measure move down. Coming to the weekly chart, here a bear spike here, a pullback, and now a channel. But at every prior low, we have seen bulls buying. If we see this prior low, the December low, the bulls bought the low and scaled in low and were able to make money here. If we see the 27th Jan week low, the bulls may have bought below the low and scaled in low and were able to make money. The bulls are buying at every prior low. The bears are trying to get good looking bear bars but are not able to get good follow throughs. They got a good bear buy here but a bad follow through here. A gap down and a good bear buy here but again a bad follow through. They got a huge gap down here but a good bull buy here. At some point the bears are going to give up. And the bulls might get a good rally here. The bulls who bought yo. At some point the bulls are going to rally all the way to the price of these bulls. The ones who scaled in lower will be able to make money, and the ones who did not but are still holding their longs will be able to exit break even. So clearly not a bear trend. More likely a bear leg in a trading range, and now we are getting a reversal up. The bulls need good follow through here to make resumption of a bull trend. The bulls fail to get good follow throughs after this week. Maybe this week. We had a great bull bar, good looking bull bar here, forcing bulls to buy high and keep a stop loss all the way down. A risky buy here, but bulls need good follow through. They fail to get that, which I think is more likely. Trading range is going to happen. They got a bull bar here, bad follow through. They got a bull bar here, bad follow through. They got a bear bar here, bad follow through. What is more likely after this bull bar? Bad follow through is more likely. But you have to be open to the possibility that this week might be another strong bull bar and that there might be a change in the character of the market and start of a strong bull trend here. Right now, I'm more bullish than bearish, at least for 2 legs up. A possible expanding triangle once we break below this high, 23,869. We got a low here, double bottom here, and a higher double top here. The breakout below the double bottom has failed, double top has failed, the neckline of the double top has failed, and we are rallying all the way up strongly. Bulls who are hoping for a bull trend need a good follow through here. Now, what are the signs that we are getting a good follow through? First of all, we did open a big gap down and straight away rallied up back above the prior low, the March low. Then we are getting gap ups and decent bull bars closing above the midpoints, but a big tail on the top of the bar makes it a little more neutral than strongly bullish. However, again a big gap up here and a close above the midpoint. And today, again, we are opening about 540 points gap up. So that is all signs of good bull strength and a possible start of a bull trend here. At least a strong bull leg, a first leg, strong first leg up. We might go above this high and make an expanding triangle top and a possible negative reversal, but the rally here looks quite strong. What does today looks like? I have a few lines drawn here, but I think that is all not relevant right now because we are opening a huge gap up. 100 points takes us somewhere to 23,400. Might get rid of all these lines here. The trend channel line, nothing much important here. Okay. So Friday was nothing but a buy climax and a trade bridge. There was a big gap up and a buy climax. That is what usually happens on big gap up days. We have trade range days, more like. Okay. So the market has opened right now. And a huge gap up, far above from EMA. The bulls need good looking bull bars here for the market to hold all the way up this far from EMA. So big gap up, and as soon as we opened, the bears sold. But the problem for the bears here is that the open of the bar, as well as the high of the bar, 23,368.35 is the same. And that barely happens. It is very, very unlikely that this will remain as a high of the day. We might sell off, we might get an early sell off here, and the bulls will look to buy the breakout pullback buy setup. It is very, very unlikely. If we see, look at the daily chart here. Tell me one bar which opened at the same price and remained as a high. Even the huge bear trend days have a small tail on the top. This bar right here, it does look like it did open at the open as well as the high remain the same, but it is not. If you see, there was a 40 paise tail here, 5 paise tail here. The big bar here had a tail on top, big bar here had a tail on top, big bar here had a tail on top, had a tail on top. It is very, very rare. Only 1% of the bars here on the daily chart will have a tail on the top, will have no tail on the top. The open as well as the high remains the same. What if this bar turns out to be a big bear bar closing on its low? Do I sell at the close or do I sell at the low of the bar? No, I would not. It is less likely that this will possibly remain as a high of the day. And whenever things like this happen, there is usually an early rally. 95% of the times, there is usually a good looking bull bar and an early rally all the way up to the high of the day. Or the market might go sideways, and there might be a late reversal all the way back to the high of the day. So why are we spending so much time here in the middle of the bar? Because middle of the bar is the key price. The bears want to close below the midpoint to make it more bearish. The bulls want to close above the midpoint and make it a reversal bar, though having a bear body, but still a reversal bar. Big gap up, open as well as high of the day is same. So close somewhere around the midpoint of the bar. What is more likely? More likely there is going to be buyers below the bar rather than sellers. And we are going to rally all the way. This is possibly not going to remain as high of the day. That is going to be more likely here. 1 hour time frame looks like a strong bull trend with gap ups. There's a gap here which did not close. There's a gap here which did not close. And now we have another gap here. It looks like a small bull trend here with a lot of strong gap ups, sign of strong bulls, and small pullbacks. 15-minute chart here, big gap up, big down, big up. Should be a big confusion, but the gap ups here clearly suggest that we are more bullish than bearish, and we are going to rally up before entering some sort of a trade range. So the first bar has closed somewhere around the midpoint, not all that bearish. And as soon as the bar closed, we are finding buyers coming in. A lot of bulls know that we are going to rally all the way up to the high, and they do not want to wait. They do not want to wait. Do not want to wait that we might go below the low of this bar, might make a buy signal bar, and then rally all the way up. They are buying as soon as the bar closed, using a wide stop loss, because the probability of this rallying all the way up is high. The probability of this not remaining as high of the day is high. And so they are buying as soon as the bar closes. They know even if we do sell off, we will get back somewhere to the buy price, as well as all the way up to the high of bar one, and they will be able to get out at profit or at minimum at break-even price. So if you do use a wide stop loss here, limit order bulls can buy. I would not. I would choose to stay flat. A big gap up, a big bear bar, but close somewhere near the midpoint, a big tail at the bottom of the bar, and as soon as the bar closes, we have bulls buying. What if this bar closes, becomes a bull inside bar with a close near the high? It's a reasonable swing buy, but I would not. It's a big gap up and a tight stop loss. I would wait for a follow through bar before buying. We are far away from moving average, and the bulls clearly need good looking bull bar. The bulls, if the market wants to convince the bulls to buy this far from EMA, it needs to make bars which are more than average. It needs to be good looking bull bars. Big bars closing near the highs with small tails or no tails near the high of the bar. If there's 1 bar, 2 bar, 3 bars looking like that, more and more bulls will be willing to buy. What if this turns out to be a bear bar closing on the row? I will not sell. It is more likely we are going to rally all the way up here. I would not sell until the bears clearly tell me that we are always in short. Until there are clearly good looking bear bars closing near the lows, I would not short. Right now, the best thing to do right now is to stay flat. So bar 2 is also the close of the 10-minute bar. The bulls are trying hard on the 10-minute chart to close this bar above the midpoint. The bears want the opposite. They want the bar to close near the low, or at minimum close below the midpoint of the bar. And they are possibly not going to get it. 30 seconds left for the bar to close, and the bulls are clearly attempting to close this bar above the midpoint. Good for the bulls, bad for the bears, and clearly sideways here. So bar 2, a bull inside bar, closing near its high, a small looking bull bar, but the bulls need follow through here. The bear got a big bear bar and a disappointment here. The bulls got a decent looking bull inside bar, a small bar, but not high probability yet. I have a few lines drawn here. There was a double top here. We broke below the double top and reversed up. My bet is that we are going to make an expanded triangle. We are going to break above this high. The bulls, with all these gap ups and strong rally and small pullbacks, should be able to get above this high. And the bears, they want the opposite. They want the bear channel to continue. They want to make this, they want this to be a occasional higher low, higher high, and a double top, a possible pullback here, double top pullback, and the lower highs to continue, and the bear channel to continue here. but they have failed to disappoint the bulls here. The bulls have been able to get good follow throughs, good gap ups, and strong looking bull bars. Makes me think that we are going to get at least at minimum near this trend line, the red one, and easily above the 870 high. So what is happening here? As soon as the bar closed, the bulls are not showing urgency here. Not a lot of bulls buying above the high of bar 2. It did pull back a lot here. There's a hesitation by the bulls here to buy. A possible micro double bottom with bar 2. But bulls need a good looking buy here if they really want to start looking to buy. What if this bar turns out to be a good looking bull bar? A bigger bull bar than what bar 2 looked like. With a good looking bull body and a close near its high, I would buy. But stop below bar 1. So bar 3 is also the close of the 15-minute bar. We have a big gap up and a big tail at the bottom of the bar here. All that bulls need is close above the midpoint of the bar, and the bulls on the 5-minute chart need a good looking bull bar, a follow through bar, a big bull body, and a close near its high. Another 1 minute left for the bar to close. Let's see how the bar looks like. The first bar of the day was 162 points. And the second bull bar was too small to reverse this entire thing. The bears would hope for a second leg down, and the bulls know that this will not remain as high of the day, and they want to buy. But this is too small to buy. And looks like we are going to get a doji here. Bulls at minimum. Bulls got what they wanted at minimum on the 15-minute chart here, a close above midpoint of the bar. But still low probability here. Low probability for the bears, low probability for the bulls, and looks like we are going to get a trading range open here. Big gap up. Not good looking bear bars or good looking bull bars. Makes me wonder we might just enter a tight trading range or go sideways until we pull back to EMA. We can pull back to EMA by just having a sell climax on open, or we might go sideways. I think the sideways is more likely here. I am looking to buy. Need good looking bull bars here to buy, or need a sell off and a good looking bull reversal bar to buy. Doing anything right here? The math is probably not good. Really limit order trading here. Sellers sold above the bar 2 high and made money. There will be buyers below the bar 3 low, below the bar 2 low, and will somehow be able to make money. Limit order trading, scalping, most of the traders should avoid trading when the range looks this tight. So if you turn on the news right now, there has been a big gap up, and a lot of news channels will be like, oh, this is because of the Trump giving a 90 days pause. This is because of some good earnings. Maybe Infosys has some big deal coming up. Maybe because of Reliance, maybe because of Modi doing something. But that is all complete nonsense. That is not how the market behaves. They have a list of 10 good news, and they have a list of 10 bad news, all these news channels. And whenever something good happens in the market, they start publishing the good news. They are all stupid. They think everything happens in the market is because of news. It is news that drives the market. But not. The market already knows. The market already predicts the news. The news is already priced in. And things that we do see right now is all because of the technicals. 95% of the time, the market behaves based on technicals rather than news. You want to become a full-time trader? Don't focus on the news. Don't focus on all that noise out there. Focus on the bars. Focus on what is right in front of you. Focus on the charts. The chart will tell you a lot before the news happens. So 50-minute chart, we have a close above the midpoint, good for the bulls, bad for the bears, but not a bull bar. Bad for the bulls, disappointing for the bulls, big gap up, and a bear bar. Disappointment for the bulls, disappointment for the bears, makes trading range more likely. Confusion here. The bulls do not want to buy up here. The bears do not want to sell up here. The bears want a second leg down. The bulls want to rally all the way up to the high of the bar one. The market is clearly confused, and when confused, we should look to buy low and sell high. What if this bar turns out to be a bear bar closing on its low? I would not sell. I would choose to stay flat. There is the first bar of the day has 20% chance of remaining high or low of the day. But this bar, with the open and the high remaining the same, has less than 20% chance of remaining high of the day. Just maybe 5% chance. I would look for a reversal after sell off here. I would look to buy low. A bear bar closing on its low, but still, I think there will be more buyers below this bar than sellers. Sellers will look to sell high and buyers will look to buy low. Similar order was buying as soon as the bar closes. The bulls need a good looking bull bar here, a possible double bottom with bar 2, and a rally all the way up to bar 1 high. So what if bar 5 turns out to be a bull bar closing near its high, a double bottom with this, but we are inside. We are overlapping with the past 3 bars here. And still I would not buy. A reasonable swing buy, but barely 30% chance that bar 1 will remain as a low of the day, bar 2 will be, bar 5 will be start of the rally all the way to higher bar 1. If I am buying this far above from EMA, I need good looking bull bars. Bars that are closing near the highs, strong bull bars, big bull bars, and good follow through bars. I would prefer to buy high only if I see strength, only if I see good looking bull bars. Or else I would prefer to buy low. I would prefer to buy pull back. I would prefer to buy below bars rather than buying above bars. Confusion here. We have a bear bar, then a bull bar, then a disappointment bar here. We have a good looking bear bar closing on its low and now a disappointment bar here. What do you think will happen once this bar closes on its high? The next bar is going to be more likely a disappointment bar, a bear bar, or a doji bar. Less likely it is going to be a bull bar. Low probability. And because it's a low probability, it's a reasonable swing buy. Possible double bottom with bar 2 low and a rally all the way up. But I will wait for more follow through bull bars, bars closing near the highs before looking to buy. Well, did we go below the low of this bar? No, we did not. Almost an outside up by going below outside. Looks like an outside up bar, but it is not. The bulls are attempting to get a good bull looking bar here. Need a follow through after this bar, or else the next bar will possibly be a disappointment. Not high probability yet to buy or sell anything in here. Big gap up. A lot of traders will see the news and will be thinking of all the positive things happening all around the world and will be like, this might rally all the way up to a new high and this might be a start of a strong bull leg here. There are a lot of traders who do this, but they are clearly trading based on hope. They are not trading based on objectivity. And that is what causes most of the traders to lose money. To see the chart in front of you, you have to realize what the chart is telling you and then trade. The bar 5 closing near its high, reasonable swing buy, but not high probability yet. I would look for another good looking bull buy here before buying. Double bottom with bar 2, outside up bar, almost an outside up bar, not an outside up, but in a tight trading range here. We got a bull bar and disappointment bar. We got a bull bar, this possibly will be another disappointment bar. Nothing to do here. Looks like the market is going to be sideways until it pulls back all the way to the EMA, or the EMA pulls back all the way to where the market is right now. Big gap up, good for the bulls. Close above the midpoint of the bar on the 50-minute chart, good for the bulls. Two good looking bull bars, good for the bulls, but bad follow throughs. Far above from EMA and no sign of strong bull strength here. We have a bull close Good bull close here on bar 5, but no urgency for the bulls yet on bar 6. Disappointing for the bulls. Disappointing for the bears because we did get a big major bear surprise here, but we did not close near the low. We closed above the mid part. We get another possible bear close here and the start of a bear leg, second leg down, but disappointing follow through for the bears again. The bulls are attempting another good follow through here and a good looking bull reversal bar on the 50-minute chart. We have 3 minutes left for the bar to close. If we do get a good looking bull close here, more and more bulls will be willing to buy. But need a big bull bar, not a strong small bull bar like this. I need the size of the bull bar to be bigger than what it is right now. Can buy. Can either keep a tight stop below this bar or a wide stop below the low of bar 1. If this turns out to be a big bull bar, I would buy. This turns out to be a bull bar like this, or even if it closes near its high, but I would not. It's a small bar. More likely trading range behavior than start of a strong bull trend here. Bar above from EMA, we might pull back. Or we might go sideways until we touch the EMA here. And in trading ranges, I think trading ranges is more likely. So disappointment is more likely than happiness. And what would disappoint the bulls here? Is a small bull bar, or a small bear bar, or a big bear bar, or a bar with a tail on the top. All of that makes trading range more likely. There were a lot of traders who waited all 3 days over the weekend and are eager to take a buy. There you go. I just take the buy for the first 1 hour, make huge money, and rest for the next 4 5 hours of the day. They would be eager to take buy above this bar 5 high. But that is what is the difference between a profitable trader and a losing trader. The profitable trader does everything similar to what the losing trader does, but he avoids the losing trades. The losing trader has studied well, has been through all the terminologies, the technicals, knows how the market behaves, knows the double bottoms, the double tops, the wedge tops, the wedge bottoms, but takes a few trades based on hope. That is where he makes losses. And that is what makes the difference between a profitable trader and the losing trader. The disappointing for the bulls again. Double top with bar 3 high, but a bull signal bar. Not good for the bears, not good for the bulls. Possible tight trading range and sideways here. Swing bulls would be long here with a stop below bar 1 low or a wide stop, maybe around 50% of the gap up here. But nothing high probability yet. We are approaching this high, the 25th March high. We might get there, but the bulls need good looking bull bars here before we start rallying all the way up there. The high of bar 1 is possibly not going to be the high of the day, so I am looking to buy, but I'm not ready to buy here and keep a stop this long and target this less. The math is not okay here. Yes, high probability we might go all the way up to the high of that bar 1, but big risk. The probability, the risk, and the reward, they all have to be in line when I want to place a trade. It is not right now. Probability is high, we might get all the way up to bar 1 high, but the risk is too much. And I would not want to risk this big on first trade of my day. So I would choose to stay flat. Most of the bulls and the bears here are scalping. They are buying below bars, they are selling above bars. They're scalping for 5 points, 10 points, 20 points, 30 points. Nothing much here for stop order traders. Mostly limit order trading here. Decent bull buyer, decent bull buyer. What if we get another bull bar, another bull bar, another bull bar? Then I might want to look to buy. This bar is above the low of this bar. This bar is above the low of this bar. And this bar is again another attempt to be above the low of this bar. So bull micro channel right now, 4 bar bull micro channel. But the bulls need good bull closes here. Right now, disappointed. So what is today going to be more likely to be a bull bar closing for what is today going to be like a bull bar closing on its high, a bear bar closing on its low, or a doji bar. Let's make it easy, okay? On a monthly chart, we are clearly in a trading range, and in a trading range, we look to buy low and sell high. Right now, we are low, so we are a little more bullish than bearish. On a weekly chart, we were in a bear channel. A bear channel is a bull flag, and a bear channel usually ends after 3 or 4 pushes down. We already had 4 pushes down here, and the bulls have been scaling it at every prior low. The bears at some point are going to give up, and this might be a possible start of the price at which the bears give up and the bulls enter, and a rally all the way to the top of the bull channel high, of the bear channel high. So we are more bullish than bearish on the weekly chart as well. On the daily chart, yes, it is possible that this week might be a disappointment and we might enter a trading range here. But right now, looking at the bull bar here and the gap up here, the bulls are more likely going to get a follow through. Daily chart, steep bull rally here, less likely a bull leg in a trading range and more likely start of a strong bull trend or a rally all the way to the high of the bear channel, to the double top expanding triangle here, to the start of the bear channel here or here, and all the rally all the way up there for the disappointed bulls to exit who might have bought the close of that bar there and scaled in all the way down here. More bullish than bearish on the daily chart as well. But the problem for this to be a strong bull trend bar is that we already got a big tail here. 164 points tail. It is less likely going to be a strong bull trend day here. Why? Because look at the daily chart here, okay? Tell me one bull trend day, a strong bull trend day which had a big tail at the bottom. A bull bar here, but a strong bull trend day here, but no tail here. A decent bull trend day here. We do have a tail, but the open was at 500. The low was about, the tail was 70 points low, 70 points high. A bull trend day here, small tail. 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 This is one of those days where we did have a big tail at the bottom and we still managed to somehow close all the way near high of the bar. A big bull body closed at the high, a big strong bull trend day with a big tail at the bottom. This is a low probability bar. Very less bars on the daily chart will you see bars like this. Will today be a bar like that? I don't think so. Today is unlikely to be a bear trend day. Today is unlikely to be a strong bull trend day. So what is today more likely going to be? A trading range day. The bulls will look to scalp, will look to buy and scalp, take quick profits. The bears will look to sell high, scalp, and take quick profits. Bulwa descending bar. Bulwa need a good looking bulwa here. If this bar turns out to be a bulwa closing at its high, can buy, but a possible trading range day and you are buying all the way up there. Have to trade small, keep a wider stop loss, and exit as soon as there is a disappointing follow through. Need a good bulwa here, not strong enough yet. 50 seconds left for the bar to close. Need a bar to have a body bigger than what it is right now. Nothing to do here. The thing going in favor of the bulls are high lows. The low of this bar is low above the low of the prior bar. The low of this bar is above the low of this prior bar. The low of this bar is above the low of this prior bar. And we have another bar here. Bar closing near its high, close near its high, close near its high, close near its high. Looks like we are going higher. But not high probability yet. I'm looking to buy lower. I will be looking to buy higher if I get 2 consecutive bull bars closing near the highs. We have 4 bull bars here, but bad follow through here, a tail at the top, a tail at the bottom of the bar, a small bull body, 2 close near its high. Far away from moving average. Need good looking bull bars before I look to buy. So what is happening here? Disappointment for the bulls again. We have a bear bar coming in. Do we break below the low of this bar, the low of the prior bar? No, we haven't. The bull micro channel is still going on. 1, 2, 3, 4, 5, 6. 6 bar bull micro channel yet. But no good follow throughs for the bulls. Makes me think that this is more likely a bull leg in a trading range rather than sort of a strong bull trend. So a bear bar here. Looks like most of the bulls who bought on bar 5 high have scalped for about 20 points here. 23 points. And we broke below the low of this bar here, 950 bar, ending the bull micro channel. Bears have a low to short here, but a bull sell signal bar, nothing high probability yet. The market is going sideways. No strong sell signal bars, no good bull follow through bars. Confusion and disappointment for the bulls as well as for the bears. Trading range most likely here. If market wanted today's bar to be a big strong bull trend bar like this, it wouldn't have sold off this big on open. Rarely do we have a big tail at the bottom and the day turns out to be a strong bull trend bar. And because of such a big gap up, bear trend is unlikely. And because of the reason that the open as well as the high of the day is same, we are more likely going to break above that high. And after that, if you are assuming that we might sell off into a big bear trend day, it is possible, but it is less likely. A low to short for the bears, but a bull sell signal bar, not high probability yet. And no good follow through for the bears. We had a big bear bar here, bad follow through. A bear bar closing on its low, bad follow through. What do you think is more likely going to happen here? A bear bar, bad follow through here. The bulls have gotten a big bull bar, a decent bull bar, not a big bull bar, small bull bar, but a bad follow through, a bull bar. Bad follow through is here, small bull follow through is here, and now a big bear bar closing on its low. An okay swing shot here, a low to double top with bar one high, but bar one high is such a strong magnet that I feel that this low to short will, even if we do sell off, it will be only for a scalp, and the sell off will possibly fail, and we will reverse all the way up to the high of the day. I'm looking to buy here, but either need a very strong bull signal bar or need good follow through bars to buy this high in a possible trading range here. The best choice right now is to stay flat. Not long, not short, just stay flat. The 50-minute chart, we have three bars. Tail at the bottom of the first bar, small bull body on the second bar with a tail at the top as well as at the bottom. Bear reversal bar, the third bar, but small bull, small bear body, big tail at the top, prominent tail at the bottom as well. We are entering a tight trading range. Okay, swing short, but not high probability yet. If we do start selling off with good looking bear bars, bars closing near the lows, then the probability of this high remaining as high of the day will increase. Right now it is maybe 10%, maybe 15% that this will remain as high of the day. But if we do sell off strongly, this might remain as high. The bears barely won here. Barely got a decent entry bar here. Nothing great yet. They would still be disappointed. I'll just show you on screen what are the four common outcomes that happens whenever there is a big gap up. This is the slides which I have access through Brooks Encyclopedia. So whenever there is a big gap up, there is usually a double bottom near EMA. The bulls got two good bull bars here, but then bad follow throughs. The bears did not get strong bear follow throughs. More likely bear again and trading range, a possible double bottom, which they did get. The bulls got a double bottom near EMA and then a rally all the way. The bears a double top and a possible sell off here. It is possible today. We might get a double top today. We sell off, but the sell off is all not going to be that strong because of the big gap up. Big gap up, big down, confusion more likely and trading range behavior. Wedge bottom here, near EMA and a reversal all the way up. Possible today. Wedge shop, also possible today. Two attempts at wedge shop and then we got a sell off, but not all that strong. What is the possibility of a strong bear trend day? 20% of the time. We might open big gap up. First bar remains as high of the day, and we get a small pullback pattern. Possible bull trend reversal, 20% chance, and a bear trend reversal and enter a trading range 60% chance. The opposite here. This is what is more important. Whenever there is a big gap up, there is a 60% chance of swing up in the first hour. 85% chance of pullback in the first 2 hours. What are we getting right now? This is the start of bar 1 as a pullback in the first 2 hours. There's 70% chance of swing up after 10 a.m. 10 a.m. there in US is the midday. For us, it will be around 12:30. So there is a 70% chance of swing up today in Nifty 50 around 12:30. gap up trading range, and a possible trend resumption up around 12:30. 75% chance that today will end up as a trending trading range day or a trading range day. 60% chance of trend resumption and only 35% chance that the gap will close today. So if we see here, there is only 35% chance that we are going to fall all the way down here. 60% chance of a possible swing up in the first hour, but looking at this first big wiper, it is more likely that we are pulling back first. 85% chance of that happening in the first 2 hours. 70% chance that we are going to rally all the way up. Possible breakout, a bull flag, a trading range, and a trend resumption up somewhere around midday. And a possible trading range day by midday. 70% chance of that happening. Right now, a trading range open, a low to short, double top with bar one, but not high probability yet. Small bars, disappointing follow throughs. There are traders buying below bars and selling above bars and are able to make money. All signs of trading range behavior. We might go sideways here into tighter range until we pull back to EMA. Nothing for the bulls or the bears yet. A lot of computers here are trading. If there is nothing for the bulls and nothing for the bears, then who is causing the movement here? It is the computers. The computers, the market, they are all always in search of an equilibrium price, a price where the highest amount of trades will take place, the highest amount of buyers and sellers will come in. And this is possibly that equilibrium price for the computers right now. The place where buyers and sellers both are able to make money. For us as an individual trader, we need an edge. OG is on the 50-minute chart. The fourth bar is also turning out to be another OG. Clearly a tight trading range here. Limit order market. Nothing to buy, nothing to sell. As a stop trader. So this is also bar 12. Bar 12, the multiple. Bar 12 is also the close of bar on the 60-minute chart. The bulls are trying hard to close above the midpoint of the bar. Makes it more bullish than bearish. The bears are trying hard to close below the midpoint of the bar. Midpoint of the bar is a magnetic right now for the next 3 minutes. We close over the midpoint, good for the bulls. We close below the midpoint, disappointing for the bulls, okay for the bears, but not high probability to short. 2 minutes for the 1 hour time frame bar to close. This was a strong bull trend on a 1 hour time frame, and if you see, I'll just make this a little bigger. Okay. On a 1 hour time frame, we did have a wedge here. Blue, one push up, two push up, three push up, but tight bull channel will most likely break out above. We did break out above. We did pull back and we rallied all the way up. So possible measuring gap, which is somewhere to 592 here. We might rally there. Not today, maybe sometime this week. The traders trading the 1 hour time frame should look to buy on a pullback or on a good buy signal bar or on a good full follow through bar. High trading range right now. Trading range open. Looks like the market is waiting for some news or some event before it makes a big move up or down. I'm slightly more bullish than bearish because we made a high low here, a high low here, and another attempt at a high low here. But not high probability yet. If you can attempt at a low to short here, guys will look at this as a double top, but a bull sell signal bar. More likely buyers below than sellers. And sellers above. So this is almost an IY pattern here. The low of this bar was 301.3 and the low of this bar is 301.6. So this bar did not fall completely below the low of this bar, but almost. But tail at the top of the buy signal bull inside bar here. Clearly trading range behavior, more likely sellers above and buyers below. The only thing that is going in favor of the bulls, even in this tight trading range, is that they are able to get higher lows. And the first bar of the day, the higher first bar of the day is acting as a magnet. We got a bar one low. Then this bar 5 low is above the bar 1 low, and this low is above the bar 5 low. The higher lows and higher highs, but no great buy or sell setup, which gives me a higher probability. I always like to win, and to win, I need higher probability. I do take low probability trades by trading small and swing trading most of them, so that my wins are bigger than my losers. But this is too confusing here to take any swing buys or sells. But no good follow throughs for the bears here. And now we are at a high to buy, but we are still far from moving average. Had we gotten a high to buy right near the moving average here, I would have possibly bought for a swing long, for a swing trade, for a possible bull breakout, and a possible measure move up. Right now, we are just stuck in a very tight trading range here. Most of the beginners, and not just beginners, even all the traders should avoid trading in here. If I do get a small bull bar somewhere down here, a small reversal bar, even though a bare body, but a close above the midpoint, I will look to it. If I get a small bear bar here, I would have shorted that, but I'm a little bullish today because of how strong that high magnet is going to be. We are going to rally someday, some point of the day, towards high of the day, towards the high of bar 1. I would not look to short here. I'm only looking to buy. And I'm looking to buy somewhere near the low. If it does rally up, I will buy only if there are good follow throughs. The way for the market to go sideways to pull back, the EMA has almost come somewhere to 23,200. It's another 100 points far. This is a high to buy. Most of the bulls will argue that it is a possible swing buy, but still far from moving average, overlapping with a lot of prior bars. Small trading range on a smaller time. If I go on a 2-minute chart, this is a very tight trading range here. Nothing to buy, nothing to sell here. This is mostly limit order trading. There are buyers below bars, there are sellers above bars. They are scalping, they are taking quick profits using wide stops, and the probability is high. Probability is 90% that if I sell above a bar, I will make some scalp profit. But the stop is quite huge, and the equation, the math doesn't make sense. But individual traders like us, the computers can do that because the computers do not have an emotion. They can continuously keep buying below bars, selling above bars, scalp, quickly exit, quickly enter within a milliseconds, but we cannot. We as individual traders should more focus on swing trades rather than limit order trades, rather than scalps. And right now, the market is in a limit order market. Not taking trades here is as good as winning because you're not losing money. Taking the trades which have the perfect maths, taking trades which makes the most sense mathematically is the ones that you should look to enter. I might miss a trade here if it does make a small buy here and if it falls off that. And will I be worried about it? No. I only worry about the trades that I do take. And I worry about will I be able to manage them well? Will I be able to trade them the way I had decided to? I miss trades all day long. That doesn't give me a FOMO. That doesn't give me stress that, oh my god, I missed such a big move. No. I will take trades only when the maths make sense to me. Most of the traders should try to stick to that. Nothing great here, the maths doesn't make sense. You might miss a big move up or down if you avoid trading in a trading range, but that happens 20% of the time. 80% of the times the breakouts in a trading range fails. We are better off not doing anything inside a trading range, especially somewhere near the middle of the trading range, because that is where the market usually spends most of its time at. Trading ranges does everything to make the probability low. It did go above the high, and now there's a big wave forcing bears to sell a low to short all the way near the middle of this possible trading range. And they got stuck here. We did get a good looking bull bar here, a good high to buy setup here, but a bull bar closing far above, making traders take a wide stop loss and forcing them to buy high in a possible trading range day. So that is what the trading ranges do. They give very few chances of buy setups or sell setups. Come on near the lower high and spends most of the time near the middle, which is where you should avoid trading. And you should wait. You should wait for the market to give you that opportunity to come somewhere near the top, make a good strong sell signal bar, and give a good strong rally, strong sell off. Sorry. Nothing to analyze here. The monthly chart after this big gap up has turned into a doji bar now, and we are right near the open of the month. The open of the month was at 23,341. Let's mark that. Let's see how the market is behaving right there. Was it 341 is the open of the April month. We gapped up above it and we sold off. Came close to it, we sold off. Let's see how it behaves. Not all that important because we are still 15 days left into the close of the month. But we fell a long way down from the open of the month. And we are rallying all the way up. And we are somewhere around midday of the month. I'd sell off strongly here, but less likely. Low probability yet. Another bear bar, trading range low, but close somewhere near the middle of a trading range. More likely buyers below than sellers and sellers above. You look at all these bars. There was a big bull bar, disappointing follow through, and a reversal down. There was a big bear bar, disappointing follow through, a high to buy setup. You think that the bulls are going to swing by you or no? You see, there were more sellers above the bar. The trading ranges always makes you do something that you should not be doing. It makes the market looks clearly very strongly bullish, but right near the top of the range, and it makes it looks very clearly strongly bearish right near the bottom of the range. But the traders should do exactly the opposite of what the trading range is telling them to do. A high one buy setup near the top of the range, sell. High two buy setup near the top of the range, sell. Good looking bull bar near the top of the range, sell. Good looking bear bar near the bottom of the range, buy. We are right now almost 2 hours into the market, more than 2 hours, and a tight trading range. This is clearly a trading range open and a breakout mode situation. You might break out above and go for a possible measure move up, break out below and go for a possible measure move down. But I think upside is more likely than downside. It is going to get trading range here, and I'm still slightly bullish because of the fact that we have opened a big gap up. We're still above EMA, and open as well as have the raise same. I'm looking to buy low. Tight trading range on the 15-minute chart here. 1 hour time frame, bulls managed to close over the midpoint, but no follow throughs yet. Just look to buy low and sell high. That's it. Don't focus on the patterns here. Don't focus on the bar numbers, the high 2, high 1, the wedge. Just look to buy low and just look to sell high. That's it. That is how trading ranges behave. You can consider selling high somewhere here. The probability is usually 60% that we might fall somewhere to the midpoint of the trading range. But today will be less than a little less than 60%, maybe 55%, maybe 54%. Because of the fact that the high of the day is a magnet. A strong magnet today, not just a normal magnet. Looks like the bears are selling below as well. But the bears convince other traders to sell over need good bear follow throughs. Big bear bars, lows near the lows, and need to get out of this trading range. Look at how in the last few seconds of the bar started turning up, found buyers somewhere near the middle of the trading range, and is reversing up. So there are more likely buyers below the bars than sellers. What if this turns out to be a strong bull reversal bar? There is not. Last 5 seconds left. Even if it did, it is still low probability because we are somewhere near high of a trading range, and we are also inside this side trading range. Nothing to buy, nothing to sell here. If you would ask me, just tell me either to be long or either to be short right now. Don't tell me to stay flat. I really don't want to miss any move here. You can be wrong because there is slightly higher probability that we might rally up rather than you can take a long here, keep a stop below bar 1 because there is a slightly higher probability that we might rally all the way to the high of bar 1 rather than the low of bar 1. multiple supports here. There will be a trading range low here. The moving average is coming all the way up. The breakout, even if it does happen, will possibly fail because it's a trading range. 80% of the times the breakouts in a trading range fail. And open as well as high of the day has been a magnet. So more likely we are going to break out above the high of bar one. So still stuck in a tight trading range here. I am looking to buy somewhere low. So maybe buy after good bull breakout with follow through. But I will choose to stay flat here. Do nothing. This is clearly limit order trading, and you have to be too quick to buy and sell and scalp to make money in this kind of a market here. Just sit back and relax. Let the market do its thing. Make a good looking buy signal somewhere near the bottom or near the low, or maybe give a bull breakout before you look to buy. Clearly in a tight trend range, nothing is high probability yet in this inside this. Just relax and be patient. Market always rewards the ones who are patient. Like Udarpan, what do you do when the market is stuck in a trading range like this? I do nothing. I just keep observing the bars here, trying to analyze. I just wait for the market to come at my price somewhere near the low. Wait for it to do something I am predicting it to do, and sit back and relax. If Nifty is not doing anything, I might look onto some other stocks which are causing the news, which are causing some movements, but I do not trade them. I stick to Nifty only. There's only to check if there's something going on in some company right now, just to pass the time that I have right now, because I'm doing nothing when the market is stuck inside a trading range here. Maybe find some stock which is behaving like how Yes Bank did a long time back. Rana Kapoor telling everyone that diamonds are forever, and so is his stock. Turned out that his stock is not diamond, and the diamonds are not forever as well. Diamonds lost their price since then, but not as much as Yes Bank did. Came from all the way from rupees 400 to rupees 10. I did make a mistake of buying that stock as well. I was doing some job, and whatever stipend I used to get, I used to invest in the stock market, and that stock from 400 came to 300, so I did invest in that. Then it came to 200, I did invest more. I kept on averaging at 150, at 100, at 80, at 50, every possible price, and then later exited around rupees 30 at a huge loss. I know what to call catch a falling knife. That was a lesson. I had a few sleepless nights after that. It was not that big of a money, but I lost a few months of my few months of my salary, of my stipend there. What about selling on a stop below the low of this bar? I will not. Overlapping past 10 to 12 bars, right near the low of that tight trading range, as well as near the middle of this overall trading range. Low probability, not a great swing shot or a scalp shot. The market is just going sideways until it pulls back to EMA. I recollect one story that L used to share. I don't remember where, in an inside his trading room or in one of his videos, but he keeps telling he actually has a friend, a lawyer friend, who doesn't understand market, okay? But he still made a lot of money in the market. All he does is he keeps cash, and whenever the market falls 10%, he invests. And when it falls 20%, he invests more. And when it falls 30% or 40%, he invests every penny that he has. He invests every penny that he has. Market usually falls 10% about once a year, or once in 2 years, maybe 20% once in 3 years. 30 to 40% is like once in a 5 year, and 40 to 50% is like once in a decade event. You should try to invest every penny that you have whenever the market falls like 30 to 40%, because the RBI, the FOMC, they will come out with something and will not let the market This becomes zero. The market is never going to become zero. If you see the yearly chart, the market is clearly in a bull trend. Yeah. What makes you think there is going to be a V bottom reversal down and the market will come to zero? It will not. Any reversal here is going to be minor and a pullback, even if it falls 30 to 40% from where the current level is. There is going to be some news, something happening. All you have to do just is blindly invest every penny that you have wherever the market falls 30 to 40%. Then sit back and relax. This was the COVID time. It fell around 40% and we did recover. And not just recover, we made whoever did invest some sometime around that year would have made a huge money. Yeah. That is how simple he keeps the market. The market here also fell about 10 to 20%, and now we are adding all the way. I don't know how much it will fell, 17 to 18% here. People who saw this big gap down saw the market falling 15%, 16%. And the friends similar to who L had, if he did invest, he would have been sitting at a good profit right now. In just span of a week here, he made around 7%, which is huge, which is very huge. So if you want to invest and you do not understand market, if your friends want to invest, if your parents want to invest, or if your relatives want to invest, they do not want to listen to your advice about a particular stock, anything, just tell them कि जब भी मार्केट 10% गिरेगा 20% गिरेगा 30% गिरेगा डालते जाओ जब भी 40-50% डाले गिरे जितना भी पैसा सब डाल दो do you buy up here no same reason market is inside a trading range and right now it is inside even a tighter trading range I spend more than 20-30 bars here 20-30 bars overall and about 15 bars here a lot of traders want to enter in a trading range because it is tempting. It is tempting that they will get to keep this tighter stop loss. And what if the market rallies a long way up? They will make a huge profit, maybe 1:5, maybe 1:6, maybe 1:10. But 80% of the times, this is going to fail. They fail to realize that. And the 10% of the times, the 20% of the times, when it is going to work, you will have to manage it so well that you are able to recover all of the losses that you have done before. The computers can do that, but it's difficult for the humans to do that. It's better you look for a trade where there is 60% probability or even a 40% probability. Anything less than that or in middle of that or above that, you have to be careful. There's rarely anything above that. 60 to 70% is the highest probability that the market offers. And I will trade as well as every trader should trade when the market does that. I think it's a tight stop. Even if the pattern looks fantastic, if the setup is fantastic, if the pattern is fantastic, but if the stop is tight, there has to be some institution taking the other side of the trade, right? So even if everything looks picture perfect, then you are missing. It means that you are missing something. It means that your probability is less than the probability of the institution taking the other side of the trade. Yeah, always be careful whenever you keep a tight stop. You cannot keep a very tight stop. You cannot keep a very wide stop. Like if you buy above this, you cannot keep a stop below this. You have to use something somewhere here, or maybe below the low of this bar, below the low of this bar. Reasonably tight stop, or maybe a wide stop somewhere near here, somewhere near the low of this bar, or somewhere here. You cannot keep a wide stop loss all the way down here. The stop cannot be very tight, or the stop cannot be very wide. Any reasonable tight stop or any reasonable wide stop is okay if the context is good and if the context is good and the maths make sense, you can take the trade. Here it doesn't. Bad context, no good location to keep a stop, and the math is not okay. Limit order trading here. Sell above bars, buy below bars, and exit with quick profits. There's a swing trader. Wait, do nothing here. Really in a tightening range here. You might pull back all the way. We are pulling back to 5-minute EMA, but the 50-minute EMA is still far below. Might go sideways until the 50-minute EMA follows up. I break out here. So big bear bar on bar 1, bad follow through. Decent looking bull bar, bad follow through. Big bear bar again on bar 4, bad follow through here. Bull bar, okay follow through is here, but we later reverse back down. Good looking bull bar, we reverse back down. Big bear bar, bad follow through is all time. Here almost another 10-15 bars here. And another bear breakout. What is more likely here? Disappointment is more likely. Breakouts are possibly going to fail. Bulls who bought below the low of this bar, the prior bars, over will scale in low and will attempt to make money here. Let me get rid of these boxes here. We are still inside a tight turning range. It is quite clear on a 50-minute chart as well. A lot of dojis and small bars. This is like dead money. The bars have been getting smaller. There are tails at the top as well as near the bottom over there. And nothing to trade inside in this. Break below over there, if it does do turn out to be a small bar, like the one we have right now, might possibly reverse up over there. Shouldn't be more bigger than this. Decent swing by, but too big of a bar inside a possible tight trading range. Less likely there is going to be a sort of a strong bull trend, but a reasonable swing by this. Field bear breakout reversal up should at least go to the top of the bear leg. Top of the bear breakout as well as to the top of the bear leg, which is 316. Can buy for a scalp. And have good follow throughs, can hold part for a swing while exiting part for a scalp. You can see what is happening here. This format for the bulls, but the bulls still have another 3 minutes to close the bar. Still far from EMA. With all this trading range price action, the bulls need a good looking follow throughs, or else it will still go sideways and pull back somewhere near EMA. If I had to be either long or short, I would be long right now. Tail bear breakout, good bull reversal bar. Though it is in the middle of a trading range over there, but possible swing buy, low probability, but that is what makes it a possible swing buy. Stop somewhere not below this bar. Can keep it below this bar, but too tight. Would keep it somewhere near 265. Reasonable long that. Reasonable swing long. The follow through here is important. This bar or the next bar turns out to be bad, it might fall further. $316. Target for the bull scalper should be around 316. Another 30 seconds for the bar to close, and the bulls did not get a good follow through yet. It's 1-1 for the bulls. 10 seconds for the bar to close. On a 1 hour time frame, we have a bear inside bar, but nothing high probability yet. Bulls are trying hard for the bar to close near its high, but a doji bar. If you do want to swing and hold on to your longs over there, you need good looking bull follow throughs here. This is too small yet. That is more likely after this bad follow through here, after this bull bar, there will be another bad follow through. The bulls need to close all the way up somewhere near 325. Close above, past so many bars over there, close even further, somewhere above 330 would make it even further bullish over there. This bar or the next bar to do that. They fail to do that and reverse back down. If this bar closes somewhere near below and the next bar turns out to be disappointment, I will exit my longs. If you're scalping based on actual risk, you need to take 1:1 over there, which you have almost achieved. About 12 points here. which is what most traders should do. Take quick profits and exit. Or maybe wait for another 2 minutes to see how far this bar closes. Closes all the way above with a possible second leg up. If it does not, if there's a tick on the top of the bar, or if the next bar turns out to be disappointment without a good follow through, another tight trading range behavior. Appear on top of the bar. Small bar yet. Bulls at minimum need the bar to close above this high. Above 316. Bulls are trying hard to close above that swing high. And they are failing to get it. I did scalp out of my longs here. Good looking buy signal bar, but bad follow through. Another bad follow through, almost a breakout bar until the very last second over there, and now disappointment. There were sellers selling above the bars over there, still stuck in a tight range, not a great location to stay long there. Do the right thing to do. Exit your longs with a small profit here. Looks like we are gonna stay sideways entire day today. The decent swing long buy setup here. Breakout pause, breakout, a reasonable high to buy setup for reversal and bad follow throughs. And trading range more likely. Might break out again above below. And whenever there is a trading range, there is a possibility of a deep pullback as well before the market starts rallying back up. This is what I was talking about. Sellers selling above the prior highs. It did go above that prior high, but we are still selling. Why? But the sellers came in. Why? Because we are inside a tight trading range limit order market. Bad for the stop order traders. If you did buy on a stop above this for a swing long, with a slight chance of a possible breakout above, it failed. So either you exit with a small loss or at break even or with a small profit, but you cannot stay long. We did trigger that sell signal bar, but it is a bull body and more likely buyers below the bars and sellers above. So whenever there is a trading range open, especially a very tight trading range open, that is another sign that we are not going to have another strong trend up. Even if we strongly break out above, we might only rally for maximum 3 to 5 hours. And once there is a reversal setup, the market will fall back down again because this is a magnet now. This is a price where most of the buys and sells are taking place. This is the price where market feels that it is in equilibrium. There will be a lot of buyers here, a lot of sellers here. Even if we do break out above, there will be a lot of disappointed sellers who might have scaled in near the prior highs and would have been disappointed by the bull breakout, and they might want to scale in higher below wherever closing on is low to exit the profit at break even or with a small profit, which will drive the market down again. So you have to be careful whenever, if there is a breakout and a follow through over there, you still again have to be careful buying up there over there because the market might still reverse back down once there is a Okay, sell setup. You have to be very quick and you have to be careful. If it does break out below and give you a sell setup, sorry, then gives you a buy setup, that will be a better looking setup, which I am looking for today. A breakout below somewhere, a breakout below this, test of the moving average, somewhere near the bottom of the trading range, and a good looking buy signal bar and a rally all the way to the high of the bar one. Market is just stuck right now. Doing nothing but just stuck. This is too tight. How big is this range? 22 points. The market since the last 1.5 hours has spent time in middle of this 22 points range. Is it possible to make money here? No, it is dead money. It is clearly limit order trading, but even for limit order traders, this is difficult. This is too small, so too small of a swing together to make profit by limit orders as well. So today we did gap up, we tested the open of the April month and we sold off straight away. We added somewhere close to the open of the April month again and we reversed back down. But the reversal is not having strong follow through bars. So bears are lacking strength. The bulls are lacking strength. The bulls are unable to close bars above the open of the month. The bears are reversing but are not failing to get follow through bars. Trading range look to buy or sell high. That's it. Do nothing but buy or sell high. Even if you do break out above, you can buy, but exit as soon as there is a reversal because it is unlikely that we are now going to get a strong bull trend or a bear trend day today. Trading range open. This will act as a magnet. Any breakout up or down might go for 3 to 5 hours and reverse back down here. Somewhere near the middle. Might close somewhere near today. Might close somewhere near middle of the day. Middle of today's range or near the open of the day. Today's range is about 160 points, but that is just the first 1-2 hours. We did get a okay range and then we just stuck. But have nothing. It's nothing happening here. Let's see how Bank Nifty is behaving. Small bars and bull channel, but not strong enough. Difficult to trade in a market which is this weak as well. There are less bulls buying above the high of the bars, above the prior highs, and more bulls who are willing to take profits, exit, and look to buy lower somewhere near the moving average. No great buy here. Nifty is clearly stuck in a tight range. It's still far from the 15-minute moving average, which is right now at 23,123. 5-minute moving average is quite close. So Darpan, you are saying that the open of the day and the high of the day are rarely same. What about the previous session? Yeah, the open of the day and the low of the day was at the same price at 22,695.4. The open here was as well as the low was the same. But look at the first two bars and look at the follow through bars here. This was a bar closing near its head. This was a bar closing near its head. This was a big bear bar, but the next bar, the bulls were so strong that they bought as soon as the bar 3 closed and we rallied all the way up. This was so strong. It was probably the dominating feature of the day and will probably dominate the rest of the day. So very less likely that we were going to get back below the low of the bar 1. Well, today that is not the case. Had we opened, where I got cut there, had we opened gapped up, had we opened gap up, which we did today, but had good looking bear bars and consecutive bear bars closing on the lows together with a major by surprise. This turned out to be a big bear bar, but had we gotten another bear bar closing on its low, flipping the always in short, I would have forgot about the possibility of a reversal all the way up to the high of the day. It would have been one of those days where high and open remained the same, but it did not. If you look at a few examples. Yeah, 26th of November, high of the day and the open of the day remain the same. If you see the high of this bar, 343.3. We had a lot of bad follows here, but once we start getting good looking bear bars here, we have to forget about the chance that we might rally all the way up to the open. This is clearly a bear trend day, and it turned out to be there was a sell climax and then a trading range here. Similarly, if I look for Open and low of the day similar. Yeah, here it was 25th of Feb. We open of the day as well as the low of the day was same. We did rally but not that strong. We did win sideways and the last bar of the day broke below the low of the day. Here we did open gap up and we had a major bull surprise and that is what caused the open to remain as a low of the day. Here, do we have strong bear breakouts anywhere in here? No. So open of the day is less likely to remain as high of the day. I'm still waiting for a good. This is approaching. This is quite close to the EMA. Went sideways for a lot of bars here. A good strong buy signal bar will have 30 to 40% chance of remaining as a of starting a bull trend swing up. Need a good bull reversal bar here. Double bottom of this bar. Test of moving average and the reversal up. 50-minute chart is still stuck inside this. By the time the bar closes, it will be too big and closing somewhere near the middle of the side trading range, lowering the probability of a buy above it. And that is what trading ranges do. They do everything they can to keep the probabilities as low as possible. But if this bar turns out to be a bull bar, it looks right now. If it does close near its high, I wouldn't mind going long above it. I do not want the bar to become big. Close right somewhere here, around 305. Oh, it is becoming big now. It is forcing me to buy somewhere near the middle of the trading range. Okay, swing long but not high probability. This turned out to be an outside up. Almost an outside up, not an outside up yet. And moving average is yet not been tested. The first touch of the moving average, will that behave as a 20 gap bar buy setup? Considering the trend hasn't been a strong bull trend day and instead a sideways trend. Yes, it will still behave as a 20 gap bar buy setup buy because there is one big gap up. But the chances are low. It is not as high as 60%, maybe 51%, maybe 52% probability that we might test a moving average fund bias and test all the way up to the high. Because the trend hasn't been a strong bull trend. This is not pullback after a strong bull trend. This is pullback in a sideways day. It is a reasonable buy, but not high probability because the bar has been big and close somewhere near the middle of this trading range. Almost an outside up. Difficult to buy up there. Even if I draw the middle of this entire range, it's right there. This is a price at which, what's the price? 308. 308 is a price where the market has spent most time at. And there's a buy signal right near there. It's a strong buy signal, a reasonable swing buy, but low probability. That is what makes it more of a swing buy rather than a scalp buy. Not high probability yet. And a little far from the moving average. It was so close to the moving average that the moving average will possibly act as a magnet. The market might sell off again compared to the low of the moving average. But if the market starts trending up from here, the character of the market changes. There's a good buy signal bar. The follow through looks good up till now. If there is another bull bar, I will buy. Once there are 2 or 3 consecutive bull bars closing near the highs, clearly showing that the character of the market is changing, I would buy. But for now, nothing. I would choose to remain flat. Reasonable swing long. But when the range becomes this tight, I try to be very selective. And it would have been better had the bar at the tail at the bottom of the bar tested the EMA. It is still above EMA. So more bulls will be willing to buy only if there is a good follow through or will wait for the market to stay sideways or maybe pull back below until it tests the EMA and then reverse back up. Difficult to do anything here. That one, had you bought above that bar, you would have made money, right? Yeah, the probability was not all that great, and I'm gonna let it go. I'm gonna let someone else make money because I did not feel the context right. The close was somewhere. The location of the bar. The bar is good. It's a double bottom with this bar. It is a buy setup, a reversal up after failed breakout below the lower the trade range. But as a stop order trader, the location is not all that great. I still feel there will be sellers above the bars, but it's a low probability that we might get a good looking bull buy here. But if we do, it's a surprise. It's a low probability event. And then there will be 60% chance of possible challenge up. You see the long tail on the bar, top of this bar, indication that there are sellers above. Sellers are looking to sell somewhere high in this tight trading range and they are coming in. Also an indication that the bulls who bought above here are scalping. They're not holding the longs for swings. The high of this bar is 307, the high of this is 318, so almost 10 to 11 points scalp here. The bulls are exiting the longs. So another 10 minutes for the 60-minute bar to close. The first bar of the on the 60-minute chart was a big tail. The second bar was a bear inside bar. We did trigger the sell signal and we reversed up, trapping the bears here. I think the bulls will attempt an outside on bar here. The high of this bar is 319, the high of this is still about 2 points below the high of this bar. We might get there. This high. Big gap up, bear inside bar, bear trap by one tick. Failed breakout below the bear signal bar and a reversal up with an outside up bar. Looks like we might get a breakout here. The bar needs to close near the high and need good for a through. What do you think? More buyers or more sellers above this bar? To keep things simple, it is still inside the trading range. There will be more sellers above rather than buyers. 80% chance that the breakout is going to fail. But the reversal has been with a strong buy signal buyer. So basically a 50-50 chance right now. The reversal has been three good looking bull bars, one more bull bar here. And the market might flip to always in long. With more likely sellers right now. 55% chance there will be sellers, 45% chance there will be buyers above that bar. What about selling the high of bar at 12 p.m.? What about selling at a limit order at the high of this bar or at the high of this prior and the high of this prior high? You can. The bears who sold above this over there and scaled in higher have made money here. But the range is too small for you to uh, take this kind of quick trades. Most would avoid and wait for a strong breakout up or down to trade. That is where the probability will be high enough for a possible second leg up or a second leg down. That is after a breakout. After a breakout. If this bar turns out to be another bull bar closing near its high, I would prefer to go long. The market has two variables. One is price and one is time. And if you see, this bar closed above the high, above the close of this bar. This bar closed above the close of this bar. This bar closed above the close of this bar, and this is turning out to be the fourth bar, which is fourth or fifth bar, which is closing above the close of the prior bar. Yes, it is not breaking out above strongly in terms of price, but in terms of time, it is controlling most of the bars inside a trading range, which is quite unusual, and which signals that the bull strength is more than the bear strength here. We are above EMA. We are getting consecutive bull closes above the prior closes, and the high of the day is a magnet. Makes me more inclined towards buying up here. I would buy if this bar turns out to be a bull bar closing direction. Attempting a bull breakout. Either here or either here. Stop. Okay, I did go long on this one. There are four consecutive bull closes, all of which are closing above the prior highs. But this is an important bar. This is a breakout above this high trading range, and this is an important follow through bar for the bulls. But I think even if we do pull back, we might make a higher low and reverse back up to the high. Stop somewhere below this bar or below all the way here. Bulls will be hoping for a strong follow through bar. The bears will hope for the opposite. A good looking bear bar, a bad follow through for the bulls, and a possible breakout failure, reversal back down. This bar is closing far above the high of how many bars? The high of 20 past 25 bars. This bar is closing above the high of past 25 bars. More likely we are going to go up. The bulls attempting a good follow through here. More than all the trading range, the trading range high, this high is more important. Clearly a swing high, and the market is going above it. The market reversed it once from the open of the April month, reversed it twice, and has failed. Failed to get good consecutive bear bars here, reversed back down. When the market tries twice, something twice or more, and fails, it usually goes in the opposite direction, and that is what is happening here. But you have to be aware of the possibility that today is not going to be a strong bull trend day. Even if we do rally up. Is it on any reversal if it happens above? Even if we rally for 3 to 5 hours, strong 3 to 5 hours or maybe 10 hours. But very unlikely that we are going to go far above. It's been almost midday and there has not been a single bar which has touched EMA. 99.9% days have at least one touch of EMA. 99.5% days have at least 3 bars below with a low below EMA, and 99% days have at least one close below EMA. We haven't gotten any of that. Once there is a reversal after breaking above high of the day, we might get that later. But today there's unlikely to be a strong bull trend day. What if this bar turns out to be a bull bar closing on its high? Or even if it turns out to be a bull bar closing above the close of the prior bar, even then more and more bulls will be willing to buy, betting on a bull breakout and a new high of the day. 1, 2, 3, 4, 5 consecutive bull bars. Looks like we are going to go up. Big gap up sideways for a long time. Decent bicycle bar, good follow through. Bulls need another good follow through. Whenever bulls in our trading range need one more good bar, they usually fail. If this is going to be a very tight trading range, they might fail here. On the 15-minute chart, we got a bull bar. All that bulls need is one more strong bull bar. But if this turns out to be a tight trading range and a breakup failure, they will fail to get a follow through in the next 14 minutes. That is what will give me another indication whether to eject my longs or hold on to my longs all the way till high of the day. Decent follow through here, but I need bigger bull bars, strong follow through, and a breakout above high of the day. What if this turns out to be a bear bar, double top with this bar, higher high double top with this bar, lower high double top with bar 1, and a possible breakout failure of this side trading range? That would still be a low probability shot. Looking at how many bull bars we have here, 5 consecutive bull bars here. The bears will need some kind of a second entry shot before reversing this. It's not a strong rally, it is quite weak, but there are 6 consecutive bull bars which signify more bull strength rather than bear strength. The bears will have to attempt a second entry shot before they are able to reverse this bull rally down. So if this turns out to be a bear bar, I would not short, neither would I exit my longs. If this turns out to be a bull bar, more bulls were willing to buy. Bulls dominating in terms of time, not in terms of price, but clearly in terms of time. By having so many consecutive bull bars, even the small. Another 20 seconds for the bar to close. The bulls would prefer this bar to be another bull bar, closing above the close of the prior bar. 6 consecutive bull bars here. An outside up bar on the 60-minute chart. Bear trap for the bears who sold on a signal bar, on the bear inside signal bar. And a reversal up. You might rally all the way to the high of the day right here. You might pull back as well, but minor pullback. We are right near open of the month. We did gap up above the open of the month, we sold off. We came somewhere close to the open of the month, we sold off again, we went sideways. This is the third time we are approaching the open of the month. The bears have failed twice. When the market tries to do something twice and it fails, it usually does something in the opposite direction, and that is what I feel. It failed to reverse twice from the open of the month, and now I feel it might break out above the open of the month. We did rally up here. The bears would argue that we are possibly making a wedge top with this high, and here, and a lower double top with bar 1 reversal from open of the month. But these are just too many bull bars. It is unlikely, even if you do get a wedge top here and a lower double top, the bears will have to create a very strong sell signal bar or a second entry shot before they are able to reverse this bull rally. So right now, stay either long or flat, but do not short, do not sell above prior highs and scale in higher. This looks like we are going to go above day high. We also sometime around midday today. It's 12:30, and usually at 12:30, market does something in one direction to trap the traders in that direction and goes the other direction. This might be start of that. Might be a possible midday bull trap, reversal down into a bear breakout or reversal up, a lower at a bit of and a bear trend resumption down. Possible, but not likely. Why? Because we have 6 consecutive bull bars and this is turning out to be the 7th consecutive bull bar now. A lot of traders are waiting to buy in a pullback. They do not want to buy high up here in a trading range. A lot of bears who would have sold in this tight trading range or sold at prior highs want to exit the shorts once the market reverses down. If the bears are looking for a pullback to exit the shorts, and if the bulls are looking for a pullback to enter longs, the pullback will never come. It will continue to rally high up. When the pullback comes, it is deeper than what you wanted it to be. Whenever you see this strong of a bull strength, whenever you see consecutive good looking bull bars, or whenever you see bulls ruling most of the bars, just hit buy the market. Use a reasonably good stop, a wide stop, and hold longs for a 1:1 target at minimum. Today, because of this strong bear reversal on the first bar, is unlikely to be a strong bull trend day because of such a big gap up and barely any bars closing below the lower test or testing EMA. It is unlikely to be a bear trend day from here. It is possibly trading range day. We are somewhere near high of a possible trading range day, but this is just too many bull bars together to reverse on the first entry shot. Though if I did get long somewhere here, the market reverses once here, I will not exit my longs, but if the market reverses twice, the market starts giving consecutive bear bars. Or might just surprise me and get my stop loss down there. In the rarest cases, I will exit my longs. Right now, I will just sit back and relax and let the market do what it is. Whatever it wants to do, whether it wants to go sideways here, test the game, and then reverse all the way up to the high of the day, or just break out above. I think it will break out above. But not very high probability. Turned out to be the first bear bar in the past 7 bars, in the past 6 bars, sorry. Bars are too small, but good for the bulls still. Not a high probability shot, so we bias below this bar as well as bias above. Whenever I feel that the bull deck is strong, they're always biased below as well as above the bars. This is the first signal here. If the market tries to attempt to reverse twice again, this was the first reversal from the open of the month, and a possible wedge stop. A higher I doubled out with this bar, a lower I doubled out with bar one high. But because of this strong buying over there, I do not want to exit my longs here, or I do not want to short. But if the market tries to reverse down again, I will look to exit and instead reverse to short. Not reverse to short because high is possible magnet, but will look to buy on a pullback rather than buy up there. On a 15-minute chart, we have been in a tighter range for almost 10 bars, 10 to 12 bars here. Got a good looking bull bar closing near its high, another good looking follow through, but where is the follow through here? Another 2 minutes for the bar to close, and the bulls would need a bar to close near its high, or else it is disappointing for the bulls. More bulls will be willing to buy on a pullback rather than buy up there because of the possibility of a possible trading range and a second leg bull trap. In the next 2 minutes, the bulls would want the bar to close as high as possible. The bears want the opposite. Make a bear reversal bar, a possible fail bull breakout, and a reversal back down. The open of the bar is, and most of the time that the bar is pending is near open of the bar, so it might close somewhere near the open itself and make a confusing scenario for both for the bulls as well as for the bears. Another 1 minute left for the bar to close. On the 15-minute chart, the bulls would want the bar to close as high as possible because since it is far from EMA, they need bars to look more than average if they want to buy that high. It is gap up, it is a tight range. Any breakout above, any rally up is going to reverse down. Possible final flag this after a huge gap up and a tighter range. But rally to day high is possible. Good enough space on a 5-minute chart. Seconds left for the bar to close. Looks like the bulls are going to get a bar to close near its high. Oh no. At least above the midpoint, they get a close. Okay for the bulls, not strong. And nothing for the bears yet on any of the time frames here. Bulls are aiming for a breakout above this. In the past 8 bars, the bears have gotten just one bear bar, which is barely a doji with a small bear body. The bulls are hesitating here near the open of the month. The tail at the top of this bar, there is a tail here, there's a tail here. It looks like it is entering a tighter range somewhere here. I am still long, but I will look to exit my longs if it does turn out again or if it makes further dojis here instead of good looking bull bars. Looks like we are going to break above the open of the April month. Bulls should try. We'll have to do that, otherwise the bears will surprise the bulls and reverse this back down. Bulls need to start having good follow throughs here. This is not enough. They need good looking bull bars. Otherwise, this might enter a tighter range and reverse back down. Most of the bulls will start exiting their longs and will look to buy pullbacks in. And strong bull breakouts. So we have 4 consecutive bull bars here. We have 3 consecutive bull bars here. We have now 6 consecutive bull bars here. The bulls are slightly the bulls were slightly dominating this trading range, and if they continue to keep getting bull bars here, the day might turn into a relentless buying and a small pullback bull trend there. Quite unlikely, but possible. 6 consecutive bull bars here, maybe getting the second bull bar here, maybe 4, 5 bull bars here, and the bulls will start buying higher and higher without waiting for pullbacks or a reversal down. On a daily chart, we are inside this range, this black line, or I think the red line is more important here. It's the trend line connecting the highs of this two. The black is a parallel that I have drawn based on these 3 lows, connecting this low and this low and this and overshoot. Connecting it to the high of the prior start of the pair. Looks like we are getting another bull buy here. Looking for a measurement up from here to here, and they didn't get that. But some profit booking here near open of the month, and now another run. The two bull buys. If we can get two more, three more, the day will turn into relentless buying. Bull trend day, which is quite unlikely but possible. I still think we might go somewhere near half the day. And once there is a bear bar, we might reverse back down into a deep pullback. This was a very strong tight trading range day. Unlikely that we are going to get a strong bull trend or a strong bear trend day. We did get a measure move from this double bottom. What is the next measure move now? Okay, what if this turns out to be a measure move now? The bulls would hope that the gap stays open. The bears at minimum would want this bar to fall below the high of this bar. 341.5. The gap is still open. It is a possible parabolic fetch as well. Three pushes, one push, push, push. The first push started before the bear trend, before the bull trend even began. Possible. What if this turns out to be a bear bar closing on its low? It's a strong bear bar closing on its low. I would not short, but I will still exit my longs. It's a okay bear bar closing on its low. A bar that has a small bear body like what it is right now. I would not. I will wait for a follow through bar. If that also turns out to be a good looking bear bar, I will exit my longs. Until then, this is a tight enough channel up that any wedge top or a double top is possibly going to fail and we might break out above and break above the high of day one. Looks like we are going to get a bear bar here. But what is more likely, buyers or sellers below the bar? More likely buyers below. Why? Because it's a tight bull channel up. And this is a possible target for the bulls. Maybe more buyers below the bar than sellers. Still small bars. Bulls are not as strong as you think they are. And they are getting bull closers. Which makes it slightly more bullish than bearish. The market is slightly more bullish than bearish. The 50-minute chart, just how the four bull closes here turn the market to a obvious always in long. This is turning out to be the fourth bull close on the 50-minute chart as well. So good for the bulls, but bulls need good looking bull bars closing near the highs. But this might just turn out to be a bull leg in a trading range, though it is strong, but it is still possible bull leg in a trading range rather than a strong bull trend. A possible second leg up on a 50-minute chart. This is the first leg up, then sideways, and a possible second leg up, and a second leg bull trap and a reversal down. It is possible. Somewhat 40% chance of that happening, and 60% chance that we might rally first above the day high before reversing down. Another 3 minutes for the bar to close, and the bulls will try hard to close above the close of the prior bar. They are possibly going to get that. The bears have managed to close the gap here. The bulls will have to prevent the bears getting a bear bar here on a 50-minute chart. Looks like they possibly will get it with a bear reversal bar. Another 1 minute for the bar to close, 1.5 minutes. On the 1 hour time frame, we have a strong bull bar. We are far away from moving average, and the bulls need a strong follow through bar above this. They had a big bear bar here, a disappointing bar here. Big bull bar, up till now a small bull bar here, disappointing for the bulls. Not much urgency shown by the bulls to buy above this. Looks like we are entering a tight trading range here. A doji bar here. A good looking bull bar, but again a doji, and now a reversal down. Will I go short here? If you know it is going to be a tight trading range, and a scalp somewhere near the bottom of the tight trading range, no. There's still a tight bull channel up. And this turned out to be the fourth bull bar closing, but the bars are getting smaller in size. Bulls have slightly an edge, maybe 51%, 52%, but not strong enough yet. What if this turns out to be a good looking have and buy signal bar? It is coming after a possible wedge stop. More bulls will be willing to buy a second buy signal rather than a have and buy signal. But if it turns out to be a very strong buy signal bar, a good looking bull bar with a good bull body, close near its high, small tail at the top and the bottom of the bar, some bulls would buy that. I'm still holding my longs. But if there is a reversal again, we'll look to exit. The open of the month is right now acting more of a magnet. We are holding around there. Looks like we are possibly going to enter a tighter range. Disappointing follow through for me yet. I'm just not happy with the follow throughs. And if I'm not happy with the follow throughs, that means one thing. And maybe the market is not what you think it is. It is not as strong as you think it is. If it is having pullbacks, if it is having bad follow through bars, if it is having dojis and tails and spending a lot of time at one particular price, giving a chance to a lot of traders to enter, a lot of time for traders to enter, to think and enter, it is not as strong. It is not showing that urgency for me to hold on to my longs for a good amount of time, for 1 or 2 hours. It is not. If this turns out to be another disappointing bar, I will trade my stop loss tightly. I will not exit, I will just trail my stop loss more tight than what it is right now. The bull is holding long. At minimum, should have a stop loss below this bar or below this bar. Keeping a stop loss all the way down here doesn't make sense. Yes, it is going to be a trading range day, but not even a single bar has touched over the EMA. Makes me wonder that it is possible. The bulls are possibly stronger than what they are in our trading range. And this might be a possible bull channel. If I draw a parallel, that takes us somewhere here. Let me get rid of this mission move. Doesn't look like we will get there. Market is just entering a tight trading range here. I think we might get somewhere near this trend channel line before we reverse down. Now I had higher highs and higher lows. Bar 1, bar 5. This bar is above the low of bar 5. And we are making slowly going up here. I'm very disappointed for the bulls over there. I will trade my stop loss slightly. So I did exit my longs here. Reversing down for the second time with a good sell signal here. I would not short. I'm still looking to buy on a pullback. But somewhere near EMA. Not even a single bar close below EMA. 99.5% days have at least 3 bars below EMA. Once in a couple of years, there is just one day where none of the bars touch EMA. Today is unlikely to be that day. It is unlikely that this is a very strong bull trend. It is more of a bull channel day. And it is more likely that it is going to test the EMA before it rallies back up. Having buy signal reverse down over there, there were more sellers above the bar. Good looking sell signal bar, but stuck inside this side trading range here. Not great trading here. So what if this turns out to be a bulwark closing near its high? It will be high to buy setup, but it is still far from moving average, which I think is a more important magnet right now before the bulls will start looking to buy. And it is also stuck inside a possible tight trading range. A lot of dojis and tails and small bars here. All of these keeps the probability low. So more likely sellers above and buyers below. Excuse me. Looks like we are going to break out about this. High to buy setup, not that high grade, not that great. A big bulwark closing somewhere near the top of the side trading range. Not a great place to buy. I am looking for a pullback to EMA at minimum. Who is buying here? If the high to buy signal was not that great, the market did not pull back all the way to EMA, who is buying up here? It is the bulls on the 1 hour time frame. They want the follow through bar to be a good looking bull buyer. We have another 12 minutes left for the close of this bar. We are far from the moving average. The bulls who want to buy on a 1 hour time frame needs good looking bull bars together before they start buying. The big down, big up, possible confusion, but slight bullish bias. If this turns out to be a bull bar closing on its 1 hour time frame. The bears can also argue they have a possible wedge here, one push to push, and if it does go above this, it might make a possible third push here. And we might pull by some around EMA at least. The bull strength is not all that great to be buying this late in the day where there has not been a single test below EMA and far above from moving average. Not a high probability buy that. Might rally all the way up to pretty high, but I'm gonna let it go. If it does go below before a pullback, it will do so without me. So we have a bull bar, but if we consider this trading range, we are closing right near the trading. Yes, it's a high to buy setup and a possible trend resumption up after this bull leg and a possible second leg up. But it is right near the right trading range here. And we are still above the moving average and the bull bars are not all that great. We got to pull back near the moving average first. Quite a boring day today. Not much big up, not much big down. Boring but still interesting up till here. As well gap up right trading range breakout, final flag reversal down now. A higher major trend reversal with this. A lower major trend reversal with this. We do get a pair buyer. Another trading range behavior here. Sellers above the bars, buyers below the bars. Looks like that is what we have been doing all day long, except the rally up here. Very difficult trading again. We might continue sideways until we pull back to EMA. Bulls will be hoping for a good buy signal bar somewhere near EMA and then a rally over there to day high. We are hovering around open of the month. Like how I discussed early in the day. This is a possible trading range. Bulls got a good looking bull buy here, bad follow through. An okay follow through here and then a reversal. The bears got a bear bar, good looking bear bar, but a bad follow through here. A bear bar closing on through, a bad follow through, a bear bar closing on through, again a bad follow through. And now after the bulls got a huge outside up bar, and a possible start of a swing up, they got a bad follow through again. This is just a signal of how the market is stuck inside a trading range. The bulls will try hard to make this a big bull bar closing above the high of the prior bar and make this an O reversal. And then next we have another 15 days left. If it does go above the high of March month, it will trigger an O buy setup, which will be a reasonable swing buy. Most likely it will hover somewhere around the open or somewhere near the middle of the bar, near moving average of the month, and disappoint the bulls. I am looking to buy a pullback, but after a few bars with lows below EMA, at a minimum 3 bars, and at least one close below EMA. Another bear bar closing on its low, but more likely the bears will be disappointed here again. If you go at a lower time frame chart, this is a more clear trading range. There's a up, there's a down, there's a up, there's a down again. Double top here, double bottom here. Clearly trading range. We go above this high, 350.35. So yeah, we did. This also makes this a possible best stop. This 3 here. A minor best stop, but inside a tight trading range. Good to buy low, sell high. Don't think much. I'm just gonna take a break until the market comes somewhere to EMA. We'll grab a quick lunch. Just start talking all day long, might faint if I don't eat anything. So we did pull back to EMA. This was the first bar with a low below EMA, but not a great buy signal bar, as well as just the first low below EMA. 99.5% days have at least 3 bars with lows below EMA. 99% days have one close below EMA. And 99.9% days have at least one touch of EMA. We have got all 3 here. No great buy signal here, no great sell signal here. The market is still stuck inside a trading range. There are buyers below the bars and sellers above the bars. The trading range has been very forgiving for the traders here who have been buying below the bars and selling above the bars. Most of them have made money except the rally here, where the sellers who would have sold above the bars here would have barely been able to make money. Difficult to make money here. Looks like a trending trading range day here. We had a tight trading range here, and now we are sort of having a tight trading range here. More of a bull channel. We have a high low here, we have a high low here, and we might possibly make another high low here. 50-minute chart is still in a tight trading range. It is far away from moving average. Might stay sideways until it pulls back to the moving average, or might start continuing to keep going up. Another 2 hours left for the market to close. And nothing great yet. 90% days have at least one swing trade of about 100 points, but there has been none today. The bulls did buy above this bar or above this bar or above this bar. They barely made around 40 to 50 points. Not much. The bears did sell below the low of this bar or somewhere below the low of this bar. They did not make about 100 points. So same was the case on 9th of April. A tight trading range almost entire day. No great swing up or swing down. Those trending bull closes, but the bulls failed to get a bull breakout here. Second entry short, and the market just entered another tight trading range here. Looks like we might have that sort of a day today. But almost entire day we have been holding above EMA. And we have been making high lows after this opening sell climax bear trap. So we might rally up in a weak bull channel all the way to the high of this bear channel high, bear sell climax high. And that is what I'm hoping with the the price action has been too tight into a tight trading range, keeping the probabilities low. No great buy or sell signal bars, and if they were great, they were somewhere around the middle, but the context was not great. Middle of the trading range. They're still hovering around the open of the month. The bulls would love an O setup with second as well as the third bar being a bull bar, and they would love this bar to be to close as high as possible. It is possible, but less likely. This is a strong reversal of Agada, and it is less likely that this month is going to be a strong bull trend bar. It might be an outside up, but the bull body is possibly going to be small. We had a strong bull breakout here outside above this tight trading range. Went for three pushes up and now are pulling back. Pulled back to EMA with three lows below EMA, a close below EMA, two closes now below EMA. And IOI buy setup here. The range is too tight, however, to be doing anything here. I want a small bar. I want a bar of this size or of this size, somewhere near the bottom, with a close somewhere near the high, with a small take above, and I want to buy above that. This is just too big for me to buy in a tight trading range. There's still limit order trading almost entire day. That has been the case. Barely any stop order trades that would have turned out to be profitable. Most of them would have been losers. The market, the computers, the institutions, everyone's scalping, everyone's placing limit orders. Big bull bars near the high, sell. Big bear bars near the low, buy. Breakout below the low of the prior bar, buy. Breakout above the high of the prior bar, sell. And if the market has been doing that, that is what you should do as well. Do what the market does. But it is difficult. For us as humans, it is difficult to trade based on limit orders using wide stops, scaling in, managing the trades. Better to stay out, stay flat, wait for a clear setup. If not today, maybe tomorrow or the day after that. But does it make sense to forcefully take a trade here and incur a loss? Whether it goes, it might rally a long way up from here, it might rally a long way down from here. But without a clear setup, I will not be taking any of the trades in this. I might not make money, I might miss the trade, but that is not what I care about. I care when I take a trade, I care about how am I able to manage that. And if I am able to manage as per my plan, was I able to make money out of it? That is what I care about. And if I did lose money, did I lose as per my plan or more than what I had initially decided to? These are all the things. That is how easy that psychology is. People complicate it. It is just about patience. It is just about believing, having that confidence and holding on to a trade for a good trader's equation. Maybe 1 is to 2, maybe 1 is to 1, maybe 1 is to 3. Doing anything unreasonable than that is going to make you suffer in losses. Excuse me. The moving average has turned out to be flat right now. And whenever that is the case, I like to buy below the moving average with a gap between the high of the bar and the moving average. And I like to sell above. Moving average is clearly flat. It is turning out to be horizontal. That is another sign of a tight trading range. A point or a price where market has found an equilibrium and is hovering around it. If that is the case, whenever the market deviates from it far enough, I want to look to buy. And whenever market goes above it, I want to look to sell. Right now, do I buy above this bull bar? No, I will not. Too many dojis, too many tails, tight trading range, lower probability. Sellers above the bars, buyers below the bars. No stop order trades to be taken in this kind of range here. Let the market change its character before you look to buy or sell. Just get rid of the lines here. It is possible that the bears see this as a wedge stop. It is possible that they see this as a wedge stop. This bar had a small breakout above this. This bar had a small breakout over this, a variation of wedge. The distance between the first and the second point of the wedge is too big, which makes it a less reliable wedge. Either this or this is more reliable, is more appropriate, is more apt. Okay, looks like we have a bear channel here, but no strong selling, no strong buying, tight trading range. We might close somewhere like this entire day, somewhere near open of the month. We are today is April 15th. We are around midday of the month, and we've had a big sell-off. We opened somewhere here. We had a big sell-off, and we have rallied all the way back to the open of the month. We might test this and reverse back down with the gaps, the gap here, the gap here, the gap here. This is just an indication of how strong the bull trend is. We might possibly continue to rally all the way up. Up where? Up above this triangle. But it's likely that the monthly chart is going to have a strong bull body with such a big tail below. It might become an outside up, it might become an expanding triangle, might go above 23rd to 25th March high, but it might reverse back down and make a small bull body. And a possible doji or disappointing bar. Coming to today, nothing to do here. Let's see how Bank Nifty is behaving. Okay, fluctuating range, same situation. Moving average is flat. Look to sell above. There was a sell signal here. Looks like most of the bears scalped, scaling in higher. Too tight to be trading here. This turns out to be whereby it is another sell signal for a scalp, not for a swing. Moving average is flat. There are sell signals above from moving average. The bar is small, and if it closes near the low, it is a reasonable swing shot. Reasonable swing shot, but only for a scalp. Sorry, let me rephrase that. It is a reasonable swing shot, but it is less likely going to have a strong bear trend here. Low probability, can hold, but once you get bad follow throughs, just scalp and exit. So let's get back to Nifty. I want to buy, but I want to buy with a gap between high of the bar and the moving average. Whenever the moving average is, so basically my understanding is whenever the moving average is flat, I usually avoid buying above big bull bars or buying below prior highs above moving averages. I would buy, but once it breaks out above this high and has a strong follow through, if it does turn out to be a big bull bar, I will still avoid to buy because the moving average is flat and I am buying below a prior low, prior high. I am looking to buy below the moving average, not here. Let's see how gold, how silver, everything else is behaving. The commodities. Coming to gold. I can observe, everyone can observe, not just me, that there was a small pullback bull trend here. There was a possible breakout here and a measure move up. We didn't get that. We are late in a bull trend. These are the biggest bull bars in past so many bars. And this is so vertically up that it doesn't make sense to buy all the way up there. What is this more likely? Is the market overbought or is this start of another strong bull trend? Market is clearly overbought here. And we are pulling back below the prior highs. The bears who sold above this high were able to pull it back somewhere here. The bears who sold above this high were able to make profit by pulling it back. We did break out again above this. It is a possible bear stop. But what is more likely? You tell me. Will we break out above this and go for a measure move up, which takes us somewhere to 98,000? Or will we reverse back down? I think the latter. We are going to reverse back down. The minimum target for the bear should be below the low of the most recent buy climb is this, or maybe all the way below the bottom of this. Once they get there, the next target would be the prior low, the prior swing low, which is somewhere here. And once it breaks below this bull trend line here, it will possibly come somewhere to the start of this bull channel. So right now, first target for the bears will be not just this, but to close in on this gap, somewhere 91,400. Once they do that, it's a confirmation that this is a buy climax and we might rally, we might sell off all the way down to the bottom of the buy climax before we reverse back again. So trading range or a weak bear leg is more likely than a strong bull trend here. Silver, look at all the price action here. What is this? Trading range. We are somewhere in the middle of the trading range. So whenever we are high in a trading range, there is 60% chance we are going to fall somewhere to the middle. Whenever we are low in our trading range, there is 60% chance we might rally. But what is the probability chance when the market is somewhere in the middle? 50-50. We might stay here, we might rally all the way up, we might rally all the way down. So nothing to do here. There is a big leg down. The bears are hoping for a second leg down after such a big bear bar. Big breakout, big bear breakout. The bulls, after such a strong reversal up, want a second leg up. The bulls see this as a second leg bear trap at the bottom of this possible trading range, reversal up all the way to the top of this bear trap high. The bears see this as a 50% pullback of their bear breakout, test of the moving average, breakout pullback short, and a reversal down. So there is going to be sort of confusion here. If you are looking to buy, I would wait. There's a bullbar, there's a bad for it. There's a bullbar, there's a bad for it. I will wait for a pullback before buying, even if the target, the most obvious target, is all the way up to 99,695, which is the high of this bear trap high. Bear trap high. But I would wait for a pullback. If it does break out above, I would let it go. Nothing to do here. Bitcoin. I had a few measure move down here. We were in a trading range. We got above this and got that measure move. We did break out above this and got a measure move from here as well, which makes me think that we might get a measure move all the way up there if we do not close in on the gap. But I think we are. Market has did break out above and entered a bull channel. Now, bear channel, weak bear channel, clearly a trading range. Look to buy low, sell high. That's it. So just keep it simple. This is a weak bear leg. Look to buy low and sell high. Buy below prior lows and sell. That's it. Bulls are not getting good follow throughs here. Bull bar bad for the bull bar bad follow through. There's nothing. Let the market pull back again. Give you a buy setup and then let it reverse back up. If it does go up, let it go. It might hold somewhere near the middle of this trading range, which takes us somewhere to 91,000. Nothing to do here. If there's a good looking sell signal bar, you can short for a scalp. The bears will aim for the bear channel to continue with the lower highs, lower lows, and possible increasing bear strength and a bear breakout. The bulls will start buying somewhere near the bottom of this trading range, somewhere near the prior lows or below the prior lows. And will bet that the bears will give up and we will get a soon bull breakout up all the way near the high of the trading range. Yeah. Gold, climatic, silver, trading range, and bad follow throughs for the bulls makes me think that we are going to pull back below. Somewhere near the middle, might find seller somewhere here. Bitcoin, trading range, we were somewhere near the low, but this was big bull reversal bar over there to buy on a stop all the way up. I will wait for a pullback or I will wait for a better looking sell signal bar anywhere in here. This was sell signal bar, but there was a tail at the bottom and the close was above EMA. Not all that strong. Like Nifty, the moving average of Bitcoin is also turning out to be flat. If you do get a bear bar, closing here is low. With a gap between the low of the bar and the moving average, you can short for a scalp. Okay. Getting back to Nifty. Oh, what is happening here? Nothing great is happening here, trust me. The only thing is that there is a tight bear channel and a lot of consecutive bear bars now. This is still a possible bear leg in a trading range rather than a bear trend, and I do not want to be selling low when the bear trend looks like this. I do not want to be selling low in a possible bull channel, a weak bull channel, or I do not want to be selling low in a possible trading range. So what do I do here? I wait for a better buy setup. On a trend channel line, we might break out below If we do and have a bull reversal bar, I will look to buy. If this bar turns out to be a bull reversal bar, I will look to buy. Why? Because moving average is flat and there's a gap. Right bear channel, so low probability. This setting is not all that strong, so reasonable buy for a scalp. So good looking bull bar here, but barely any gap between the moving average. And I have the signal bar. I would not buy. I did close somewhere near 323, 324. I would have looked to buy. I was almost about to place my order, but I did not. Moving average is flat. Market is in a tight trading range. Do you want to buy in that high in a possible tight trading range? No. I would buy if there are good looking bull follow through bars here. But right now, not. Likely sellers above than buyers. Another doji bar disappointing for the bulls. No urgency shown by the bulls. No strong bull entry bar. Another sign that we are still stuck in a tight trading range and the probabilities are going to be low for all the stop order trades. Moving average is flat. The bars are small. There are a lot of dojis. Sellers above the bars, disappointments. At open, looking at all this bars, there was a high probability that the open as well as the high of bar one will not remain the high of the day. Right now, because of the tight trading range and because of how far we are from the EMA on the 50-minute time frame, I doubt we might go all the way up there. Might just stay sideways for the rest of the day today. Strong bear signal bar here, but we are still stuck in a tight trading range. Possible lower high major trend reversing. There are a lot of bear bars right here on the 50-minute chart as well. And a good looking sell signal bar, another good looking follow through here. The bears are hoping that we might pull back all the way to the 15-minute EMA, which is right now at 266. The bulls want the opposite. The bulls want the double top breakout to fail and reverse back up. The moving average is flat. I do not want to be selling that low until there is a clear breakout and follow through. It's a good looking sell signal, but the follow through hasn't been that great yet. Still a high low. Still above this. This was so strong that it is possibly, this is still dominating. But there were like almost 6 good looking bull bars here. And this, the sell off here is not as steep as the rally here. And this is more likely a bull flag rather than a bear trend. But because there has been so many bars here, there's a 50-50 chance. It is a breakout mode situation. Now there's a 50-50 chance we might break out above and go for a measure move up. 50-50 chance we might break out below and go for a measure move down. Good looking sell signal bar here. And a lot of consecutive bear bars here. With EMA all the way down here, we can pull back, but bears need good looking bear bars. And flat. Now I'm looking to buy in actually, unless the bears get strong looking bear bars. It has been a trading range there, and trading ranges constantly force you to do something which you shouldn't. Right now, looking at the bear signal bar and the follow through, you are tempted to sell, but that is exactly the opposite of what you should be doing right now. The people who are betting on the trading ranges, the traders, the experienced traders, the professional traders who are betting on the trading ranges are buying below the prior lows. They're buying below the prior bar lows. They're buying below the moving average. And they are buying at a scalp distance below this bar. They are buying low and they will scale in lower because that is what you should be doing in a trading range. Buy low and sell high. Today has been a trading range day. You would want to buy low and sell high. Unless the market character changes, unless you start getting good looking sell signal bars, good looking bear bars, big bear bars, bars closing at the lows, good follow throughs, small tails or no tails, and gaps between the breakout points. There is a double top and a breakout below. The bears would want a gap below the neckline of the bar and the pullback that comes after the breakout. Until then, I'm only looking to buy. Because there has been a lot of consecutive bear bars here, but still trading range is more likely. There have been a lot of bars with tails. There have been 5 consecutive bear bars, but then there was a bull bar. Had this also been a bear bar, this bar, that would have increased, that would have signaled increasing selling pressure and a possible bear breakout soon. But that is not the case here. I'm still looking to buy. I want a bull bar, a small bull bar with a no tail, an average bull body, and a gap between the high of the bar and the moving average. I would buy above that. I do not trade on limit orders. I should today, but I am not. It just doesn't give me as much confidence as a stop order trades do. I have realized that I manage the stop order trades better than the limit order trades. This, I find it difficult to scale in and I find it difficult to scalp out quickly. So where are the bears? Why are we hovering around this price for this long? All of this just signals trading range behavior. The bears want a second leg down. The bulls are buying the parallels for attempting a reversal up. The bears want a bear breakout, so will they get it? No, they will not. Why? Because we are in a trading range. This is a possible bear leg in a trading range. We are near the bottom of a possible bear leg in a trading range. And this turns out to be a good looking bull bar with a bar closing edge. We might get a by the close bull trend running into the close. Less likely, low probability that happening, but can happen. And I'm only looking to buy here. The bulls have a good context. We are near the bottom of a possible bull leg in a trading range. And we have been making higher lows. And we have a gap. The moving average is flat and the gap between the high of the bar as well as the moving average. If this bar manages to close above its midpoint or somewhere near the high, we can buy above the high of that bar. We didn't. The bulls gave up in the end. We closed somewhere near the open of the bar. Disappointing for the bears because they did not get a bear follow through bar. Disappointing for the bulls because they did not get a bar closing their return. I'm still looking to buy. I'm not looking to sell unless the bears clearly show some strength. Good sell signal here, as well as a good sell signal on the 15-minute chart. But a possible trading range where I would look to buy low rather than sell low. Another bar would have been a smaller bull bar, but turning out to be a big closing right near the EMF, lowering the probability. This might just go sideways rather than straight up. So no big trend up, no big trend down. Disappointing for the bears who attempted to follow through here. Disappointing for the bulls who attempted a strong bull reversal here. Tight bear channel, difficult to sell. Bears did sell below the low of this, attempting a bear channel. But I would look to buy low rather than sell in our trading range area. I will not be taking any more trades today. Doesn't look like I'm going to get one. The market is right now in a tight trading range. Around 3 o'clock, when the market is in a tight trading range of 4 or more bars, it usually closes within that range. And this is in a tight trading range of almost 25-30 bars. So market is going to possibly close somewhere here near the midpoint of the day. Let's recap. We'll use the TradingView platform instead for the recap. so that I can get the bar count numbers. Okay, so Friday we closed in a trading range day. Today, first bar of the day, big gap up, but a bear bar. A bar closing above the midpoint of the bar, good for the bulls, but a bear bar, bad for the bulls. Big gap up and a bear bar, bad for the bulls. For the bears, big tail at the bottom of the bar, bad for the bears as well. More likely confusion here. Big gap up, big bear bar, almost 170 points, big bear bar. Bears want a second leg down. The bulls, after a big gap up, want a second leg up after a possible opening sell climax, bear trap, and a reversal up. Second bar of the day, bad for the bears. The bears who sold the close of this bar will be disappointed. For the bulls, we are still far away from the moving average on the bull bar, who closing near its high, and it's all not a big bull bar. If the bulls want to buy this high above the moving average, they need bars to look more than average. They need good follow throughs. They need big bull bars with big bull bodies. This is not enough. The bulls need a follow through here, and the bulls are disappointed. The bears first bar, big bear bar, close above the midpoint, disappointment for the bears. Follow through bar, bull bar, disappointment for the bears. For the bulls, a bull inside bar, okay buy, but not high probability because small bar. And third bar, bar three, another disappointment. Looks like we are going to get low. The most important magnet today was the open of the day, the open as well as the high of the day. Here it does show different, but it was actually the same. So that was a more important magnet. But the bulls, instead of getting a bull follow through here and breaking above the high of bar one, got a bad follow through here. So the bulls will not be willing to buy this far away from moving average after getting small bull bars and bad follow throughs. Bears got a bear breakout here, but after the bear breakout here and a disappointment for the bears, bulls got disappointed here. What do you expect? What will happen after bar four? What will bar five look like? Will more likely be a disappointment for the bears. Okay, bull bar, double bottom with bar two, high to buy setup, but bulls need a follow through here. Bulls fail to get a follow through here. Another bull bar, far away from moving average, overlapping with the first four bars. Will more likely get a disappointment here. 60% chance we will be disappointed here and a possible trading range open. 40% chance this is going to be the possible start of a swing up after a double bottom with bar 2 low. Small bar, disappointment for the bulls. The bulls, again I repeat, when we are big gap up, the bulls desperately need behavior or price action more than average. This is not more than average. A good looking bull bar closing near its high, bad follow through. Okay follow through, not bad follow through. The bulls barely won. They got a small bull body bar, but not big enough, not closing near the high, not high probability. Double top with bar 3, but bull sell signal bar. Not high probability for the bears, not high probability for the bulls yet. Another small bull body, another trading range bar, tail at the bottom, small bull body, close below the bar 6 high. Very decent follow through, not more than average. Less bulls will be willing to buy up there. Another bull bar. Now we have 4 consecutive bull bars. But the bull bar here, bad follow through. Bull bar here, closing near its high, bad follow through. Bull bar here, closing near its high, 2 bad follow throughs. Another bull bar closing near its high, possible bad follow through. We have a 5 bar where bull micro channel will possibly break above high of bar 1. But the bulls need a good looking bull bar here to make more bulls, more traders willing to buy. And a bad follow through. Double top with bar 3, higher double top with bar 3, lower double top with bar 1, and a low 2 short. But a bull signal bar. Reasonable swing shot. Depends on the follow through that the bears get after this bar. Bad follow through. Tail at the top of the bar. Small bear body. Okay entry bar after such a strong. Okay follow through bar after the entry bar here. This was the signal bar, this was the entry bar, and this is just an okay follow through for the bears. Another bad follow through, another disappointment for the bears. This looks like a trading range here. The market looks like making small bars and tails at the top and the bottom of the bars. Big bars getting bad follow throughs, small bars having a lot of tails. There are buyers below the bars and sellers above the bars, more likely to range behavior. Another disappointment for the bears here. Almost an IY pattern here, but a lot of wicks and tight trading ranges, low probability. Another bear bar here. There is room for the bears all the way down to the EMA. But where are the good follow throughs for the bears? There's a good looking bear bar, bad follow through. Good looking bear bar, bad follow through. Good looking bear bar, bad follow through. Another bear bar closing on its low. What do you think is more likely going to happen? Bad follow through. And that is what we got. Bad follow through. Low 2 is failing. High 2 buy setup, bar 14. But far away from moving average, tight trading range, small bars, small bull bodies, sideways more likely than up. Another small bar, and then another small bar. Double top, bar 16, double top with bar 13. Reasonable swing shot for a room all the way to EMA, but overlapping with a lot of prior bars. Bears would prefer a follow through bar before taking this trade. Low probability. Bad follow through again. Looks like we are entering a triangle and a break almost situation. Another short signal, bar 20. Triangle shot. Recommend situation. Possible swing shot. Reasonable swing shot. But right near the bottom of this side trading range. Low probability yet they need a good follow through. Bad follow through again. There are buyers coming below the bars, sellers coming above the bars. Do you want to do anything inside this side trading range? No. So now bar 24 breaking out below the side trading range. Bears need a bear follow through here. But even if they do get a bear follow through here, we will be right near support. A possible bar 5 low, bar 4 low, moving average low, and a huge gap up, double bottom and a possible trend resumption up. Good reversal here. Reasonable swing long, high low here. Bar 4 was a high low. Bar 25 is another high low. And we are getting higher highs as well. Possible bull channel. Reasonable swing long here. But a big bull bar. Close right near the middle of a tight trading range here. Low probability, but reasonable swing short. Swing long. Bar 26, bad follow through for the bulls. Okay, follow through for the bulls. Another bear bar. This looks like we are still stuck in this tight trading range. Nothing to be done here. Bar 32. Similar to how bar 25 was. Double bottom with bar 25. Tight trading range. Reasonable, good looking bicycle bar. But slightly above EMA. Bar with the bar like this with a touch of EMA would have been a better context than what this looks like. Reasonable swing long, but low probability. Close near the middle of a tight trading range. Distance from the moving average, not a high probability buy. Okay, follow through for the bulls. But we are right near the tight trading range. Let's see how do the bulls scalp out from the longs here, or do they hold on to it, attempting a breakout out of this side trading range and another higher high and a possible new high of the day. Another good follow through. 3 bull bars. Unusual in a tight trading range. We have 3 bull bars here. We have another 3 bull bars here. We have a good looking bicycle bar here. We are still above EMA. We are possibly going to break out. Looks like we are going to break out. Bulls need possibly one more bull bar here. And they do get that. Market is clearly always in long. First target for the bulls will be the swing high. The next target would be day high. And a possible measure move up from this double bottom, which takes us somewhere to 23,341. Another bull bar. We have 5 consecutive bull bars here. Even though if this is a tight trading range or a trading range day, this is unusual. The bears who are betting on failed breakouts up or down do not have high probability selling somewhere at this prior high. Why? Because there are 5 good looking bull bars. The bulls, it is unusual. The bulls. So basically, a chart has 2 variables, price as well as time. Based on price, the bulls are clearly lacking strength here. But based on time, they are owning more bull bars. They are owning more bars than the bears are. So the bulls are relatively strong here. The bears, before getting short, need a secondary shot. They should look to sell above bars once the bears come show some reversal here, rather than sell at this buyer high. Another bull bar, 6 consecutive bull bars here, more likely going up. Doji bar, possible start of a trading range or a tight trading range here, or a pullback. But strong bull channel, tight bull channel, first represented by now is more likely going to fail. And you'll have an buy signal bar. And the next bar is another good looking bull bar. We did achieve the double bottom target here. Now we have a good looking bull bar here. Possible breakout and a measure move up. But the bulls need a good follow through here. The follow through has been bad. The channel is still tight, but the bears are now starting to sell above bars. Another bear bar here. Still tight enough for the bears to sell this. More bears will be looking for a secondary short rather than sell below the low of bar 41. Another high one buy signal bar. The bulls will be waiting for a more complex pullback. This is a possible trading range day, and buying a high one buy signal bar right near the top of a possible trading range day is a risky thing to do. Also, we have a possible wedge stop here. So 2 legs down are likely. High one buy signal bar is possible. Bull trap and a second leg down is more likely. Then a reversal up. More likely sellers above than buyers. And we did get sellers above and a good secondary short signal here. And this is closing somewhere near the bottom of a tight trading range of past 6-7 bars. Low probability for the bears, but the bulls should exit the longs here if they go long anywhere in here. Sellers are preferring to sell above bars rather than below bars, and that is what happened. We got bar 44 closing near its lower good sell signal, but we found buyers below the bar instead of sellers. Now we have another bull bar here, but it is closing near the top of this tight trading range. Did not close above the high of bar 41. Closed below. Did trigger the high, but closed below. Possible bull trap in this tight trading range here. Bad follow through for the bulls. Possible wedge stop here. 2 legs down likely. Double top with bar 1 high. And a wedge stop here. Tight trading range. We are high in a tight trading range. We are far away from moving average. It was almost 1 o'clock. And so many bars with not even a single low below moving average. 99.9% days have at least one touch of EMA. So that is more likely before a reversal up now. Bear bar and then another bear bar. And those who did scalp above the high of this bar should look to exit somewhere here near EMA. A support zone for the bulls here. Breakout point here. EMA and the bottom of a tight trading range here. Bad follow through for the bulls here. Bad follow through for the bears here, sorry. Not good for the bulls though. A small doji bull body. And just one bar with the low below EMA. 99.5% days have 3 lows below EMA. So before we get that, it is less likely there are going to be buyers above this bar. Another bad follow through, almost an IY pattern, but disappointing for the bears, disappointing for the bulls. Tight trading range is more likely, sideways is more likely than a strong move up or down. Another doji bar, second bar with low below EMA. Need one more. And this is the third bar, but also close below EMA. 99% days have at least one close below EMA. And thus, the price action here fulfilled all of those conditions. Is this a short signal? No. We are near the breakout point. We are near the EMA. We are near the bottom of this tight trading range. We are done with the 2 legs down. The bears got the first bar closing below the EMA. More likely a bear trap rather than a start of a bear reversal down. But there are a lot of tails and a lot of dojis, a lot of small bodies, and disappointing follow throughs. A lot of bars with buyers below and sellers above. More likely tight trading range. A high to buy setup for the bulls, but bad bull bar, bad signal bar. Close below EMA, not high probability yet. Another bad follow through. Looks like we are entering a tight trading range here. Nothing to buy or sell anything in here. And the bear sell signal bar, but too tight of a trading range to sell this low in a tight trading range. Bull signal bar, but close right at EMA. Close when the moving average is flat. I like to buy when the bull bar is at a distance from the moving average with the high of the bar and the moving average having some kind of a gap. Okay, follow through for the bulls, not high probability yet. Another okay follow through, small bar, looks like another tight trading range behavior. And now a double top with bar 55 high. And a good sell signal bar. Reasonable swing shot. But what is more likely? We are left with 1 hour left of the day. Is this going to be a start of a big bear trend day? Less likely that is going to happen. But the bears wanted a strong bear reversal day. It usually happens sometime around midday and not this late into the day. More likely trading range rather than a strong bear trend. Got a okay follow through, but they need a better follow through below this neckline of the double top. Bad follow through for the bears. Another attempt at a bear breakout and bad follow through again. Looks like there were buyers below the bar, below the follow through bar here, below low of bar 65. No bull bar. The bears did not get a good follow through here. The bears did not turn this into a bear reversal day. The bulls are not able to turn this into a strong bull trend day. Another strong bull bar closing near its high, but a big bull bar in a tight trading range. Low probability buy above with a bear reversal bar. Another low probability because forcing you to sell somewhere below the low of a possible trading range, and after such a big bull bar. Another bear bar, but not breaking out of this prior low or this prior low strongly, no good follow throughs. It looks like we can just stayed in a trading range here. It looks like we did rally into the close here, but too late for me. Are we doing anything up here? Mostly a trading range here. Quite a boring day to be honest. So good stop order trades here. Maybe above bar 5, below bar 9, above bar 25, and as well as above bar 32. Another stop order short would be below bar 63. Stop order long would be above bar 60. And double bottom buy setup somewhere above bar 70 here. A few stop order trades here, but most of them, and all of them were mostly a scalp. Only good looking short order trade here was above bar 32, which gave around 40 to 50 points here, but barely any big movement here. Difficult to make money today for stop order traders, for limit order traders. You could have sold above any bar and bought below any bar and still manage to make money, but difficult to do using wide stops and getting in lower as well as taking quick profits and exiting early. Difficult to manage, difficult to do, and a lot of work involved. Most traders should avoid doing that, and most traders should actually avoid trading a day like today. Nothing much up or down here. We did close. Let's see, did we close? We did close somewhere near the open. The high of the day as well as the open of the day remain the same. The day turned out to be a trading range day, and there is so many trading range price action here that it's actually a breakout mode situation now. You might either break out above and possibly measure move up, might break out below and get a measure move down. But the only thing in favor of the bulls are higher highs and higher lows. For the bears, they will look at this as a possible wedge drop, a test of open of the month, and a reversal back down. Yeah, that's it for today.